Thank you, Scott. And again, thank you all for attending. Hopefully you'll get a lot out of this. I'm not sure if they mentioned this to you in my second section, especially. I'm going to speed through what I've got. I've condensed maybe like a 2-hour course. I condensed it some, and I need to get down to 30 minutes. So I'm going to go through this quickly, but you will get the slide deck if you want after this is over. You can refer back to this as just as a reference point and absorb it a little better, perhaps. Okay, why is it? I'm not moving here. There we go. So this is the agenda for today: financial literacy and transparency. That's my section: record keeping, levying of fines, notice and meeting requirements, milestone inspections, structural integrity reserve study, very hot topics right now. Patricia will be taking care of that. And then lastly, with elections. So literacy and transparency, it's very important for the association and you to understand what the financial statements mean and look like, the accounting transactions, what they mean and look like, and then very important to transmit that information to your members. It's always best, and whenever I do presentations for boards in explaining financial statements, my goal is to answer questions before they're asked. I anticipate what the questions would be, and you should be doing the same when you're looking at your financial statements and transmitting that information to your members. Okay. So these are the overall topics that I'm going to cover: budgets, financial statements, methods of accounting, unique accounting issues, and financial statement analysis at the end. And just to put this in perspective, the regulatory framework that we deal with in terms of accounting, there are generally accepted accounting principles, GAAP, you'll hear me refer to that. Those are the accounting rules and financial statement rules that apply to all associations throughout the country. They're nationwide rules. There was an accounting and audit guide that was developed for CIRAs, or Common Interest Realty Associations. You may hear me say CIRA quite a bit throughout the course, but that refers to Common Interest Realty Association. That refers to or encompasses condos, co-ops, HOAs, and timeshares. So there are some general rules that apply to all organizations. In addition to that, for condo and co-op, you've got Florida laws and rules. The law, of course, is in Florida statutes 718 and 719. And then the rules are in the Florida Administrative Code, and these are just references for that: 61B and 61B 76, 22 and 76 for condo and co-op. In the background of all of this, or what may turn the corner any day now, there was some recent legislation that went through this last session, House Bill 913. And I just checked. I believe it's now on the governor's desk. So parts of my presentation, parts of Patricia's presentation may change in the next few days if the governor does sign that bill. And I think it's going to impact the reserves, Sears and Milestone, and more so than what I'm going to cover. So just be aware that this is what we know now and may not be there tomorrow. So real quick on the budget, I'm not going to spend a lot of time on budget because that's one thing that Patricia is going to cover, especially with respect to the reserves. It's a written documentation of the association plans, detailed financial plan, forecast of the activities, basis for calculating assessments for each member, reflection of the association's vision of what it's going to be. And what it is not, I'd say this because it's not set in stone. I always hear, well, we can't go over that. Can we transfer some money? Can we code it to something else? There is a tool for you to use, both in operating the current year, and then it's also a tool for developing next year's plan too. So again, it's not set in stone. It's not the law. There are legal requirements under Florida statute, and that's in 7.8. These are co-op have almost identical requirements, but for condos it's 718.112.2F and 61B 2203. Budget process, just very quickly, you need to have the responsible parties in place, some owner input, board input, and property manager. Timing should be well in advance of the following year, the upcoming year. Should be an open process, should be based in reality. And what I mean by that is you don't budget from the bottom up. You don't budget, you don't determine what your assessment needs to be, and then fill the top half with what the expenses are going to be. That's not what a realistic approach to it. And we're seeing this especially come true now with the recent legislation for Sears mandating that you do fund reserves. Because in the past, it always seemed like reserves were the things that got chopped off in determining your budget, and that they would be less than fully funded. Well, you can't do that anymore. So it needs to be based in reality. The sources of information, you can figure this out. I mean, you have landscape contracts, you got utility bills that you can follow. You got last year's results. You can go out to your service providers and ask them what they're going to be for next year, get contracts in place. Revisions to the original budget. We don't see a lot of revisions during the year. I kind of like to keep it as is, so that you do have a true reflection of what you thought was going to happen and what did happen. Again, it's a tool for the next year. Components of a budget, just a couple things here I just want to mention. You may have some things that may need to be tweaked on your budget. You may have some non-expense items related to cash disbursements. So a lot of associations these days have been taking out loans for various reasons, for repairs and large projects. Well, those principal payments on those loans are not an expense, so you may have a cash requirement that is not an expense. So that needs to be considered and listed in your budget. You may have non-assessment revenue that would be helpful to reduce the assessments. Cell tower revenues are one, things like that. And on the other side of this also, especially with co-ops, you may have some expenses that are not cash disbursements. Co-ops, and we'll talk about this later in a bit more detail, the properties are on the books and records of the association. So there's a large amount of fixed assets on the books, which results in depreciation expense. Well, depreciation expense is simply an allocation of that cost, and it does not require cash. So there may be situations where you have an expense that doesn't require cash. That would be another thing that you would have to tweak on your budget. Ability to display options. This really relates more toward if you have Sears, you can't waive or reduce those. If you have other types of reserves, you may be able to you can reduce those or waive those or reduce the funding of those. If you know that's going to happen, you can present options in the budget format, in a columnar format, option A, option B, and then you'll need your proper vote to take that less than full funding if you want. Reserves, I'm not going to spend a lot of time on this because this is Patricia's section. The only thing I'll mention here is a couple of things is contingency reserves. Those are popular at one time. State does not like to see that at all. If you have something called contingency, it really doesn't mean it's a reserve. So again, I'm not going to spend any time at all on this slide because Patricia will cover this. Now, I may circle back when Patricia starts talking and we may have some questions there. So that's it. Took care of the budget. I want to talk some about financial statements. The financial statements, the components of these are basically the balance sheet, income statement, statement of cash flows. That's more typical in your year-end statements. Again, footnotes are going to be in your year-end full-blown statements. There's supplementary information that you can have as an option and some that is also required. But it's good to consider and talk to your whoever's preparing your financial statements to consider some other types of information that may be useful as supplementary information. Balance sheet, key elements of that, it's a snapshot of the financial position as a particular point in time, usually year-end December 31st, 2024, displays assets, liabilities, and fund balance. A lot of times it's in a fund format. And what that means is your operating funds are often separated from your reserve funds or any other fund that you may have. So you'll often see that, and most times it's in a columnar format. A lot of times it's in comparative format too with the prior year, which is very helpful too. On the balance sheet, items presented, typical assets are cash, operating in reserve, and other certificates of deposit, investments if you have them, assessments receivable. The one thing I'll say on an assessments receivable, many of the accounting systems out there track those in one package, if you will, one listing. So a lot of associations have prepayments as well as amounts owed. And often when that report comes out, those are netted into one number. So you got to be careful to make sure that you're not looking at a net number. It should be the gross number, because the gross number of amounts owed should be an asset, and the amounts of prepaid should be a liability as deferred revenue. You need to consider an allowance for uncollectible assessments if you're having trouble collecting anything. There may be property and equipment, not so much on a condo, absolutely with a co-op. Another significant item that we normally see on a balance sheet is prepaid insurance, a big ticket item these days. Liabilities, accounts payable just means, things that have been goods delivered, services rendered that haven't been paid yet, accrued expenses, oftentimes salaries, things like that. Prepaid assessments, I mentioned that just a minute ago, deferred revenue, amounts held for others. If you have deposits like a review, architectural review committee deposits, you may have that. And then notes payable, I mentioned you may have loans as well. So those are typical liability accounts. In terms of the member equity, the last item, that's called your fund balance. Oftentimes, you can relate it to retained earnings. With a co-op, you probably have member certificates. You can have designations of fund balance for associations that are heavily into fixed assets. You can have a separate item there called investment in fixed assets, if you will. And then on reserves, and we'll talk a little bit more about this in when we talk about unique accounting, reserves can either be placed as a liability or part of fund balance. And the activity of the reserves is getting I've seen, you see it all different ways in different types of accounting systems. What you may see internally could be totally different than what you see at the end of the year in your formal financial statement. So the key on reserves and the activity is just knowing what you're looking at. You just have to have a full understanding of what the reserves are doing, the additions and deletions and transfers or whatever.
Hey, Dave.
Yeah.
Dave, we had a question. If you could back up real quick for liabilities, could you explain deferred maintenance fee real quick?
Well, deferred revenue, and I'll get into that. Actually, let me get into that later. I will talk about that in terms of revenue recognition. So, because there's going to be two pieces to that, and I'll talk about that later. Okay. The income statement, it's a result of the transactions for a period of time. In your annual financial statements, of course, it's a year, displays the revenues and expenses. Again, oftentimes in funds format, oftentimes comparative. And really important here too is to have this fund balance reconciliation, because the net result of the current period that you're looking at should be last year's fund balance, current activity, to be equal to this year's or this period's ending fund balance. So a lot of times you can hide some things in charging things to fund balance, and that reconciliation will absolutely point those things out if it doesn't reconcile. Variations on presentation of an income statement. Oftentimes we'll see, and I didn't mention this with the budget, but a budget doesn't have to equal your assessments, and revenues don't have to equal your expenses. If you have a lot of excess funds from a previous period and you want to reduce next year's assessments, you can reduce it by, say, $20,000 or so, whatever the number is that you want to do. And you can actually budget for a loss. But one way that some internal statements can account for that is actually show that rollover, we call it rollover, as coming into income, so it doesn't look like you're actually experiencing a loss. It's a technique internally. For year-end statements, it would go away. You would have that loss, but again, for presentation on an interim basis, you may want to consider that. Depreciation, of course, that's with co-ops. What we're doing a lot now with co-ops is, since depreciation is not a cash expense and not part of the day-to-day operations, but it is an expense of the operating fund, we will have on the income statement, revenues, and then total expenses, operating expenses, to come down to an operating net income. And then below operating net income, we would have depreciation expense, and then the overall net income or loss. And 9 times out of 10, co-ops are actually made to lose money in terms of real expenses, because depreciation is such a large number for these things. And you really have to look at your operating. Amount of detail, just how much you need to know, again, for boards to make good decisions, should be should dictate the level of detail. Year-end statements are typically less detailed than your interim and monthly statements. Cash flow is not going to spend a lot of time on this. That's in the formal year-end financial statements, but it just converts the accrual basis revenue to cash, shows the different items of cash operations. Footnotes, again, usually in year-end statements, it talks about the organization of the association, the accounting policies, revenue recognition, cash and cash equivalents, how assessments are determined, things like that. And like I said here, the relevant disclosures, we're going to have a disclosure about cash, since that's one of the biggest items you're going to see. Income taxes, association taxation is very unique, so there should be a pretty long footnote about income taxes. Reserves, and I'll get to this in a little more detail in terms of disclosure. It's such a large and important item to the association that you're going to have a large footnote on reserves. And any kind of commitments and contingencies like long-term contracts or management agreements, things like that should be in the footnotes. Supplementary information required for year-end, absolutely, both co-op and condo. There has to be some information on reserves, usually presented as supplementary information. That's a beginning to ending reconciliation of reserves. Other types of supplementary information, budget to actual, a little more detail on expenses, reserve activity, as I mentioned, and then there could be other things that you may want. But again, these are your statements. You should get information in there that you want to know. Year-end and interim statements. Year-end statements are required by statute. You need to have either an audit review, compilation, or a cash receipts and disbursements report prepared. The type of report that is prepared is based on revenue levels only. Now, it used to be number of units. That no longer applies. The membership can waive or reduce the reporting requirement, but it needs to be done before the end of the year. And right now, it's the vote is for members at a duly called meeting. Doesn't mean all members, just members at a duly called meeting. 913 has met total members. So that's a little bit of a change if that does come through. So the revenue levels, and this is really important to remember as we go into some of the accounting issues that we're going to see. If your revenues are 150 to 300,000, that's a compiled financial statement. 300 to 500 is a review. 500 plus is an audit. Less than 150,000, it's a cash receipts and disbursements report.
Can you tell me what qualifies as revenue?
Oh, and it's a very good question, and I will get to that when we talk about the accounting.
Thank you.
Because it's very important that you do have a full understanding of that. The year-end statements, usually CPA prepared. They're much more formal. The audit review and compilation. There's required presentation and disclosure from both national standards and state standards. One of the things I want to drill across to you is these are your financial statements. They're not mine. When I prepare them, I'm just helping you. They're not my statements. You need to take ownership of them. So you can't just say, well, you did this. Why'd you do that? You have to totally understand what's going into those financial statements, how it's prepared, adjustments that were made, things like that. So they're not my financial statements. They're yours. And bottom comment there. Type of report doesn't affect the statements. The services we provide, a compilation is very little. Audit is very much, and there's a higher degree of reliability on those statements. But in the end, the financial statements, either compiled or audit, should look identical. Cash receipts and disbursements. Now, the one thing that is often missed on this is that there are reserve disclosures are required. So be careful of that. All right, I'm just gonna go through this pretty quickly. These are some general, this is GAAP. These are the national standards. These are the list of things that need to be disclosed. Those references are to the FASB codification, which you do not want to read. I don't want to read it. But those are the references to the FASB codification. And I'll get to some more about this. Again, this is GAAP for all type of SIRAs. This is nationwide standards. Future major repairs and replacements, the reserves, required disclosures, a lot of them. 972, 235, required supplementary information. Now there's a requirement for this is required supplementary information, needs to be usually the last page of your financial statements. And it's going to list all your components in the reserves with funding requirements or replacement cost. So this is a national standard. That last page is because of a national standard. Here's the required supplementary information. Presentation of components, remaining life, future costs, and amounts accumulated for each component. In addition to that, you have some state requirements for disclosure. Basis of accounting, it must be on accrual basis. It must use fund accounting. Those are musts. There are some general disclosures required, multi-condominium, developer assessments, turnover audit, some disclosures. Financial statements shall contain the following disclosures within the financial statements, notes, or supplementary information. Here's more on reserves. Reserve balance forward, roll forward, meaning beginning to ending reconciliation, amounts that need to be fully funded, and then these items with respect to reserves, manner by which they were estimated, dates of estimates, interest income policy, whether they were waived, and whether you have any converter reserves. Some other disclosures on special assessments, how assessments were determined, if there's limited common elements, or if there's a developer guarantee in place. All these need to be disclosed. So, and this is just with respect to reserves. I want to go through this very quickly, and I'm not going to read these one by one, but my point in showing all of this, these on the left are the requirements under GAAP, national standards for disclosure. On the right then is under state, what the state requires. So it's a lot of stuff. And what I've done here is highlight the things that are common between the two. My point in all of this is in your year-end statements, you need someone that knows both national standards and state standards to make sure you've got your disclosures covered. And if you don't have a 3 to 4 paragraph footnote about reserves, there's something wrong. So my point again is there's a lot of disclosure and description about reserves required in the year-end financial statements. Interim statements, and this is the ones that are getting monthly, quarterly, whatever it is, for management's use only. A good thing to have is a tailored financial package that goes out every month. Usually see income statement, balance sheet, bank recs, receivable listing, payable listing, things like that. Frequency is normally monthly. These are not governed by GAAP or statutes. You can have supplementary information in these. And my point on the interim statements is they should provide meaningful information on a timely basis to make informed decisions, which leads into my next topic of methods of accounting.
Hey, Dave, real quick, just one
Yeah.
small question. In the chat here, if your income for 1 year is over 500,000 and then the next is 300,000, does the condo have to go under an audit?
It's year by year. It's whatever what that year's income is, revenue.
Thank you.
Then it can change. It can go from audit to review, review to audit, and it can change. Okay. These are the 3 typical bases of accounting: cash basis, accrual basis, and modified cash. Cash basis is just what it says, cash received. Revenues are recorded when collected. Expenses are recorded when payment is made. And we don't usually see this. We see some modification of that. Exceptions to that general rule also are for fixed assets and notes payable. If you have loans, they're usually are even on a cash basis statement, they're shown as debt. It's much easier to prepare, not an accurate portrayal of the real finances, more likely to match budget because a budget is more or less based on a cash basis. And I question whether it truly is easy to understand. I don't believe it's very easy to understand because it doesn't show the true picture. Accrual basis: revenue and related assets are recorded as earned. Expenses and related liabilities are recorded when goods are provided or services rendered. Other types of assets may result from application or of accrual basis. Assessments receivable, allowance for uncollectible, deferred or prepaid assessments. Cell tower fees may be deferred, cable fees may be deferred, special assessment, unique accounting for that, and I'll get to that in a minute. Accounts payable, prepaid insurance, these are all typical accrual basis items. It is required for year-end reports. I truly believe it's a more accurate portrayal, more complicated and time-consuming to prepare, and it may not match budget because it is on accrual basis. Now, most associations on an interim basis are going to have something in between, and it's going to be a modified accrual or modified cash. Two items that are typically going to be on these interim statements is assessments receivable, because you want to keep track of your assessments, both receivable and prepaid. And then prepaid insurance is such a large number, you have the benefit of that. If you're paying one lump sum, you have the benefit over a year. So it's proper to record that as an asset and then spread that cost over a full year. Here's a quick example. I want to show why cash basis isn't the best portrayal of what actually is going on within an association. Typical cash, and this is a very simple example. You got cash of 10,000, so my total assets are 10. I have no liabilities on books recorded at all. So my liabilities and fund balance is $10,000. So I got 10,000 in the bank, feeling pretty good about myself. Here are some accrual concepts that come in. I've got assessments receivable of 12,000, 8,000 of uncollectible accounts, 2,000 of prepaid insurance. I've got unpaid bills, accounts payable of 25,000. I've got next year's assessments collected at 50 and deposits held to 5. So what's taking me from my cash basis of 10,000 with the $10,000 fund balance, adding accounts receivable, but reducing it by that allowance because I'm only going to collect 4 of that. I got prepaid insurance at 2, and so my total assets are $16,000. I've got accounts payable, liability of 25. I've got deferred revenue, that's next year's fees, 50,000. I'm holding deposits of 5,000. So I've got 80,000 of liabilities. My total accrual adjustments are negative 74,000. Instead of being 10,000 above water, I'm 64,000 under. So this is why accrual basis is the way to go. It is the most accurate portrayal of an association's finances. Commingling operating and reserve funds, you can for investment purposes. Interest income on reserves must stay in reserves. Reserve funds must only be used for the purpose for which they were reserved unless an alternate use is approved by membership. That's the alternate use waiver. And when we think of reserves, it's the fund balance part, not the cash part, that is the important thing. They may match. You may have segregated cash accounts. All right. I want to get into this quickly.
Can you
fund account? Yeah.
Can you cover that process? Go back and cover that process for the reallocation. Is that a simple vote by the membership?
Oh, again, alternate use or reallocation of alternate use of reserve funds is again a member vote of those present at a duly called meeting. Now, Patricia will get into Sears, which cannot be voted down or waived or alternate use.
Okay.
All right, fund accounting. What I really want to speak to more here is going to be special assessments and reserve. My point on you heard me talk about fund accounting, then that's usually in a columnar presentation. Normally you have operating reserve. You can also have special assessments. You talk about transparency. If you've got a lot of special assessments or an assessment that's a project that's going over a period of time, maybe a good idea to have a separate column for that. You may have a capital asset fund. You may have a rental fund, real estate sales. You could have a breakdown of reserves shown in funds format. So those are fund types. Now here's where we're going to get into some recognition issues with both special assessments and reserves. Special assessments, they are recognized as an asset when levied, but the revenue is recognized when the expenses are incurred. In caps, that may impact your year-end reporting. And I'll just fast forward a bit. The same holds true for reserves. The reserve revenue is revenue when the expenditure is made, not when it's assessed. So when you're spending special assessments and spending reserve funds, that may alter your view on what type of financial statement you have, your financial statement requirement you may have. So you really have to be careful as you're approaching your year end to project what type of revenue you're going to have and whether you need an audit review or compilation. So you really have to be careful with that. There's some required disclosures. Just get with your CPA, make sure those are being done. Capital assets, not that common. Cooperatives, I mentioned before, will have them. Yeah, generally speaking, we just don't see fixed assets on condos. Again, co-ops they have everything. With construction contracts, my point here is make sure that any type of retainage, and we're seeing a lot of these out there right now, if there's retainage on a long-term contract, that should be included in your accounts payable. There's a new lease standard, probably not applicable to a lot of associations. Again, here's reserve and replacement. Revenues recognized when expenses are incurred. Some other issues that come up is are these expenses operating or reserve? If I get that question, and the third item there too, I just turn around the association and said, was that part of your reserve study? Was that expenditure part of the reserve study of the cost that went into the determination of your funding of that item? If it is, then yes, it's a proper cost. If it isn't, then it should be something different. Presentation and financial statements, like I said, it's normally in a separate column. And my point in leaving a trail is that, and this goes with accounting too, your reserve study should fold into your budget. Your budget should fold into your accounting records. Your accounting records should fold into your year-end reporting. Everything should be, there should be a trail of all of that. Segregation of cash, I mentioned earlier, a lot of times most associations are segregating and trying to get their cash to equal the fund balance. And can you have negative balances in reserves? The reality is yes, but they do have to be treated differently when you are preparing your budget and funding formulas. So, all right, just a few minutes here left. Financial statement analysis, warning signs. You are the conduit for information. The messenger will get shot, but you need to be an advisor and flag waiver. Things to look at in terms of cash. As in my example on the accrual, I had cash at 10, I had 50,000 of prepaids. You need to compare your cash in bank versus what your prepaid assessments are. Cash in bank should be more. You got to be careful about borrowing from reserves. A good set of financial statements are going to show if there's any amount due to or from. Anytime you're getting a delay in getting requested information, that may be a problem. Your assessments receivable, again, that should be shown separate from prepaids, and it should be aged. You should have an aged receivable listing so you can determine who's really late and take action when necessary. Most associations are pretty good about taking action. Prepaid expenses, just make sure they are being charged to expense throughout the year. Deposits, make sure they exist. Sometimes on turnovers from developer, the deposits go away. Unpaid bills, you just have to be careful again that accounts payable are being recognized. And I think this is the last ones. Legal fees, excess legal fees may spell trouble. And then, as I mentioned early on, budget variances. Budget is a tool. Variances are okay to have if you need to do certain things above the budget. And again, it's a good tool to use for your next budget. Yeah. So that's it. That's all I had. That was the speed show on financial statements. Is there anything out there, Scott, or anyone that I didn't cover? Any questions?
There's a recent question, and Dave, I'm not sure if this is your corner, but what action can be taken when people aren't paying dues, and how long do you have to give them to pay down or off their debt?
Yeah, I think that's it's definitely that's a legal action. So yeah, someone else is going to have to take care of that.
Okay, and I'm sure we'll get to a little bit more of those questions when we get to the legal portion of today's class. So Courtney, just stay tuned and we'll address your question at a later time. Is there anything else before Dave concludes his portion of today's program?
Let's see, what is deferred maintenance fee? Deferred maintenance fee, that could be prepaid. That's the terminology is, reserves and replacement funds. Those are interchangeable words. Deferred maintenance fee, we call them maintenance fees, we call them assessments, we call them, there's all kinds of words that are used for similar items. But deferred maintenance fee is generally the prepaid amount, or it could be your deferred special assessment. So if you're seeing it, just ask the question, what exactly is that? There's nothing wrong with that. And just a note, I'll keep an eye on the chat. If there is anything, I can answer directly. And I'll be sitting around. I want to hear Patricia's part and see what wise words she has about Sears and Milestone, because that's a really exciting area right now. Thank you.
Thank you, Dave. And now we're going to move on to Hans, who is going to talk to us about record keeping. All right, Hans, we see your screen. If you're talking, we can't hear you yet. We're still not able to hear you, Hans. I see that your phone is unmuted, though. Give us just a minute, everyone. Gotta love technology on a Friday morning.
Looks like we do have an additional question in the chat, maybe for Dave, while we're waiting to get Hans' audio set up. Dave, somebody asked, in the budgeting process, how do you plan for hurricanes and the costs associated?
Well, you leave town. You sell your condo and leave town. No. How you plan for it. Now, one of the things that a lot of associations have done is, everyone's going to have windstorm, but there's going to be a deductible. One of the things we've seen in reserves, some associations will actually set up a reserve for a windstorm deductible. That's one way to plan for an event like that. Other than that, you're preparing your budget well. If it's a December year end, you're in the middle of hurricane season when you're preparing your budget, but then you're preparing it for the next year. At that point in time, you really can't predict what's going to happen. But I'm sure there's a lot of lessons learned through these past few storms we've had. A lot of people figured out, hey, I can't, my trees, my landscaping wasn't covered under anything. So maybe I need to set up a reserve for that. I always said on reserves, a lot of times you don't know what you need to reserve for until it breaks. So maybe that could be a lesson learned that I need to, we never saw seawalls. We didn't see pond restoration. And all these things come about, and now they're creating reserves for them. So, that's one thing that you can do. Just, again, lessons learned from previous storms of what you can do for the next.
Thank you, Dave. I think we may have Hans back on with us. Hans, do you want
Yeah,
to?
can you hear me
Yes,
now?
we can.
Okay,
Yes,
sorry about
thank
that.
you.
I don't know what that was about, but I apologize.
That's okay. TGIF. It's Friday, so.
Gotcha. Okay,
The,
you can see my screen okay?
yep.
All right. Well, thank you, Emily. I'll go ahead and get right into it then. Thank you all, everybody, for joining us today. I'm going to do the portion on record keeping for condominiums and cooperatives. I just want to go over a few general things when it comes to the official records of your association. So you should look at it. These are the association's records. They're not the board's records. So I often get asked as an association attorney, there might be some kind of dispute or some kind of legal issue going on, and an owner makes a request for all types of records, and I'll get asked, do we have records? And the answer is yes. If it's part of the official records, and in future slides here, I'll go into detail as to what those records are. But if it's part of the official records, then they do need to be made available. You can look at it as your association is a not-for-profit corporation, and the owners are members of that corporation. And so these are actually corporate records. And as members, it's their records. And so they're just kept and maintained by the association under the board's oversight. So hopefully by looking at it that way, you'll get a better understanding of kind of how this all fits together.
Is the obligation that those records be provided, or so for example, we've had requests, we want copies of every correspondence that's occurred in the last 2 years. There's a lot of expense to gather up that information.
Right. Well, so you got to look at this. You're obligated to provide the records if they fall under the official records. And in slides here, I'll talk about electronic communication such as emails and text messages. But yeah, I mean, if they fall, and we'll also talk about how long you need to maintain such records. But yeah, the answer is yes. If they fall under the official records for the type of records that are being requested and within the length of time that you're required to preserve them as an association, then they do need to be made available. Now, you may be able to charge for the hard cost in obtain, compiling and gathering and producing these records, but they still need to be maintained and provided nonetheless. And so here's how it works. The law says that all official records are open to inspection by the members at all reasonable times. And the right to inspect includes the right to make copies, and that a reasonable fee may be charged for those copies if you're actually making copies at the management company's office or if you're having copies produced. Now, they must be made available within 10 business days after receiving a written request. And so if a member sends a written request to review certain records, that starts the countdown for the 10 business days to produce those records. Now, to your question, it's a good question. The law does also allow the association to adopt rules regarding things like the frequency, timing, location, notice, and manner of records inspections. Like you can put in rules that say records requests must be sent by certified mail to the management company's office. And then that's the way that's the formal request is made. Or that, a request for the same record cannot be made within such amount of time. That way, if you end up with an owner that just seems to be making the request for the same records and it looks like it's being done just to harass the board or the management company, the law does allow you to create rules to set up specifications for records requests. You just can't deny someone's request, or you can't require them to state a reason to request the records, because as I mentioned, these are the members' records. They're just being maintained by the association. Now, you can comply with making the records available in numerous ways. You can email the records to them. You can have them available in your office, whether it's an office on the association property or the management company's office. In that case, you just got to reply within 10 business days and say, here's the address where the records are at. You can come view them on these days during these times, and that will comply. Then it's up to them to go do it. Or now, and we'll get into this, now a lot of the records are required to be maintained online on a website if your association is of a certain size. And so really this alleviates a lot of this, because the records are already there online for the members to view. And if that's the case, then it's easy to comply, because you just direct them to the website and you just make sure that they have, the ability through a password or whatnot to access the record. So, going back several years, this was a little more of a convoluted process because the records weren't online, but now there is a requirement for online records, which I'll discuss. But yeah, so those are the ways in which you can comply with the request. Now, it's important, because the law actually provides an owner with a right to seek damages if they're denied the records. And what the statute says is that if a member is denied access to the records after that 10 business day window where you're to provide the records, they can recover minimum damages of $50 per day up to 10 days, beginning on that 11th business day if the records are not made available. So that's sort of a a stick built into the statutes to the penalty to force the associations to make sure they're not blowing through that 10 business day deadline. And not only are the owners entitled to those minimum damages, but also actual damages. So if there's some underlying reason, some legal reason, or who knows what it could be, of why an owner needs certain records, and if the failure to produce those records causes the owner damage, then they could also make a claim for those damages against the association for the failure to produce those records that they needed. That's just generally how it works. And I'll get into, as we go through these slides, I'll go into each of everything I just said in a little more detail.
That was a question. Are you going to address text and emails and how those are kept or where
Yes.
they're kept?
Yeah, there'll be a slide on that. Yes.
Okay.
Thank you, Hans. And everyone, if you would just please use the chat for questions, we'd really appreciate it. With so many people on the call, of course, we'd love to answer all of them, but we will certainly answer them as time allows. So we really appreciate the questions, and if you could just put them in the chat, that would be perfect. Thanks, Hans.
Yep.
Go ahead.
Yeah, no problem, Emily. All right, so what are the records? The statutes, whether you're talking about the Condo Act or the Co-op Act, there's a section of the statutes that actually list out what these records are. And a lot of them are what you would assume they are, common sense, but I'll go over what they are. So it's the plans, permits, warranties provided by the developer. It's the governing documents, so your declaration, your bylaws, your articles of incorporation, your rules and regulations. And also your meeting minutes, whether it's a membership meeting or a board meeting, you're required to keep minutes of what happens in those meetings, and those meeting minutes are part of the official records. Also a current roster of all the owners and their mailing addresses, unit identifications, voting certificates if they have those, and their telephone numbers. And you also need to maintain, if an owner has consented to receive notice via electronic means such as email, then their email address is part of the record to be maintained as well. And all insurance policies of the association, all contracts of the association, such as the management agreement or any other contracts that you have with any other vendors, whether it be landscaping or maintenance or some type of subcontractor, those all need to be maintained. Receipts for any transfer of property owned by the association. So if the association upgrades its furniture or whatnot, and you sell the old furniture and buy the new furniture, those receipts, those are supposed to be maintained as official records. Accounting records, so everything that we just heard about with the prior section on budgets and financial reporting, and the financial statements, all of those are official records of the association and need to be maintained. Now, at your meetings, you will be voting on things. Obviously, every year you have to have an election, but you could be voting on amendments, using the funds for alterations to the common areas, whatever it may be that's going on in your association. Those voting materials, the ballots, the proxies, anything else related to membership votes on matters, those need to be maintained for at least 1 year from the date of the meeting where the vote was held. A copy of the current question and answer sheet. Your association is required to have a question and answer sheet on file that's used really by realtors or prospective buyers or title companies, just to get general answers to some of the most common questions, such as are there rental restrictions? What are the assessments for the year? Things like that. So that would be part of the official records. And then obviously the new requirements in the law, the milestone inspections, the structural integrity reserve studies, those are all part of the official records as well. Now, and also bids that you receive. So if you've got a project going on, or you're looking for a new service provider and you're requesting bids, those bids that you receive are also part of the official records. And then your board member certification certificates, which that's why we're here today, right? You're getting board certified as a condo or a cooperative board member. And so you'll be receiving a certificate, and those are to be maintained in your official records as well. Now, the interesting part is there's a catch-all, right? So everything I just read out, it's listed in the statute. Everything I just said is listed out. And the very last thing listed out is this catch-all that says all other written records of the association not specifically included in the foregoing, which are related to the operation of the association, right? So that's pretty broad, right? That's a pretty broad catch-all. Basically what that means, and this is how you should look at it, you should default to, if it's a written document and it has anything at all to do with association operations or the goings on with the association, you should just assume that's an official record and that it should be maintained. Now, where do you maintain these records? Well, the law says you can maintain them within the county within which you're located. That's fine. Or, maybe you're on the edge of the county line and your management company office is across the line. So it's at least within 45 miles of the association, right? So anywhere within the county is satisfactory, or within 45 miles of the association.
Hey, Hans, real quick, we just have a
Yes.
question about confidentiality elements for the records, like personal phone numbers. I guess what is the confidentiality as far as some of those personal items like a phone number?
Yeah, that's a great question. So just as the statutes have a section on what is the official records, the statute also has a section on what is not official records. Now, these are things that you may have, but they are not considered part of the official records. And so it could be in the course of your community association, you may come across stuff just with the purchases and sales of units. You may come across stuff submitted by either the seller or the buyer as part of the purchase and sale agreement. None of that stuff is part of the official records. You may end up having that because it was sent to you as part of the estoppel process, but it's not part of the actual official records. Same thing with, like, say for example, an owner has a disability and they make a request for a reasonable accommodation and they provide proof of their disability. Well, that's a record that you got, but that's not part of the official records. And so there's a handful of things in the same statute that list out what is not part of the official records, and phone numbers, social security numbers, account information. So owners may be making payments through certain means, whether they're sending in check or some type of automated payment, and you may have on file what their account information is. None of that is part of the official records. And so that stuff is supposed to be redacted. Obviously, reach out to your manager and your attorney for what a list of those things are that you may have that are not actually part of the official records. But those things would need to be redacted or not produced at all. Now, you may have a document that is part of the official records, and maybe there's something on there that needs to be redacted, such as a phone number. And in that situation, you would just redact that. Now, with all that being said, the statute does say if there was an inadvertent disclosure of something that's not an official record, then as long as it wasn't intentionally done, mistake, then the association is not going to be liable. So you do have that, but just know that there are some things that you're going to have. That's a good question, because there's some things that you're going to have possession of that are not official records, and they just need to be segregated or redacted so that they're not inadvertently produced. Okay, so here we are on this slide. How long are the records to be maintained? It just depends on what the records are, because just to make it even more complicated, different records have different retention requirements. So there are certain documents that are required to be permanently maintained in perpetuity, right? And it's the things that you would assume, right? The governing documents, obviously, right? You need to keep those. The any permits or plans that you have from the developer, those you're going to want to keep in perpetuity as well. And also the meeting minutes. Okay, it was recently changed. Years ago, you only had to keep meeting minutes for up to 7 years, but now it says that those records need to be maintained in perpetuity. And it's just so that you have a history of what has happened or taken place at meetings over the years. I mean, you never know where 10 years from now there might be some dispute over something, and you need to know when this was approved or how it was approved or what the details were. And so you can hopefully find that information in the meeting minutes. And so that's why now meeting minutes are required to be maintained in perpetuity. But not everything is, right? Most records are to be maintained just for 7 years, right? But things like your structural integrity reserve studies and your milestone inspections, those are to be maintained for 15 years. Contracts and bids that you receive or are to be maintained for at least 1 year after receiving such things. And then, as we mentioned, voting materials like ballots or proxies, those are also to be maintained for 1 year from the meeting at which the voting took place. But absent those specific things, really all other records are just to be maintained for at least 7 years.
Hans, what about emails? Do you keep keeping email records? How long do you keep emails for?
Well, that's a very good question. I mean, that would fall into the category where I guess it would be 7 years. I mean, the statutes don't specifically state that. And then you also have the problem with board members coming and going, right? You might have a board member every year you have elections, or at least must attempt elections. And so the board members may change and you may not have possession of every board member's email. But I mean, that would fall under, because it's not specifically mentioned otherwise as having another specified period of retention, that would fall under, I presume, the 7 years. So if you do have copies of the emails, then those would need to be maintained for, I would say, 7 years. And we'll actually get into those electronic records in a couple of slides from now. Now, the law was recently changed too, I think a year or two ago, to say that the records, if you have physical records, they need to be organized in a manner that facilitates the inspection. So, as I mentioned, some of the stuff that's still in the law today, it was addressed because now you're supposed to have a website with records on that website if you're of a certain size association. And so those are going to be easily organized, right? Because they're going to be listed there on your webpage. But not every record is required to be maintained on the website. And so you still may have physical forms of documents, and you might have older documents as well that you still have physical copies of. There really was no requirement prior to a couple of years ago to actually have those in any organized manner. So I had done some official records reviews where you just show up and there's just boxes of documents, and you have no idea where a document is, but then you got to go through the boxes to look for that certain document that you want. Now, the statute doesn't really give any details as to how you organize it. It just says it must be organized. So I guess it's up to each association to determine how they want to organize it. But if you do have physical copies of records and boxes, I would say you get folders, and maybe you have a folder dedicated to contracts, a folder dedicated to financial records, and a folder dedicated to voting materials, things like that. And I presume that would satisfy the statutory requirement because, like I said, it doesn't give any specifics as to how you're required to organize them. It just says they need to be organized. So you got to do something more than just having a banker's box with hundreds of documents in there. There's got to at least be some organization. Now, in the event that there's records that you're supposed to have because they are listed as official records, but you end up not being able to find them. Maybe they're lost, destroyed, otherwise unavailable. Who knows what happened to them? There is now an obligation to do your best efforts to try to get those records back, to recover those records. Now, like for example, I'll just give you an example. Let's say you had bank statements, right? And going back 7 years, and something happened. Maybe there was a hurricane or there was some kind of damage, and you can't find where those records are at anymore. Well, the law now puts an obligation on the association to try to recover those documents. So you would need to contact your bank and request to get those documents back, or go on the website and download them and obtain them. It's not enough to just say, well, we had them and now we don't because of this, and so unfortunately we don't have the records anymore. You can't do that because now there is this obligation to recover those records. Now, with that being said, I do want to say this. There is no obligation to create a record that doesn't exist just because an owner is requesting it, if it's not listed in the official records, right? The official records tells you in the statute, the official records section tells you what records you're required to maintain. But I've seen all types of owner records requests, and maybe you have too. And they may ask for stuff that really there's no obligation in the law to maintain, and you're not obligated to create a record just because an owner's requesting it. I'll give you an example. I had an association client where an owner requested to know the name of every tenant within the association and the dates of occupancy, and there's no requirement in the statute to have that. So I told that association they're not required to put together such a document just because someone's requesting it. So in that situation, you just reply and say, we received your request, but this is not something that is required to be an official record of the association, and we're not required to create a record just because you're requesting it. So I just wanted to throw that out there, because while you do have the obligation to recover records that may have been lost or misplaced or destroyed, there's no obligation to create a record that you're not required to have in the first place. And I also want to say that we talked about that an owner has the right to request records at any time, and within 10 business days, you got to make them available. And that right of the owner includes the right to inspect and copy. Okay. And so if the owner is requesting physical copies from the association, then the statute does allow you to charge for those, right? To recoup your hard costs. The statute also allows members to use their own copying devices free of charge. So nowadays, the most common example would just be a cell phone, right? They show up with their cell phone and they take pictures of the records. They're allowed to do that. You can't stop them from doing that, because the statute says that owners not only have the right to access the records and inspect the records, but they also have the right to copy the records. And so if they're asking you for copies, you have the right to recover your costs. But if they're showing up with their own devices to make their own copies, you have to let them do that. They have the statutory right to do that. Just to give an example, I've done some records requests for owner clients in the past, and I've shown up with a laptop and a portable scanner, and I've just scanned the documents into my laptop, and the statute allows that to happen. So I just wanted to throw that out there as well, that if you have an owner that, not only are they inspecting the records, but you notice they're taking pictures of them or, scanning them in, as I mentioned, they do have the right to do that, and you can't stop them from doing that. All right. So let's talk about website requirements. The statute, I believe the way the statute's worded now, I think as we sit here right now, June of 2025, it's if your condo association or your co-op association has 150 units or more, you're required to have a website with certain documents on that website. Starting in January 1st of 2026, just 6 months from now, that threshold is going down to 25 units. So starting in January, if you're a condo association that has at least 25 or more units, the law says you're required to have certain documents on your website. And I'll talk about what those documents are. But what that also means is you're required to have a website, right? I mean, you can't, the law doesn't come out and say you're required to have a website. It says you're required to have documents on a website. So therefore, it implies you've got to have a website. So, whether it's a portal, I have some clients that have their management company has a portal system, a web portal, and that's available for all associations managed by that management company. And so then you go on and you have a web, it's a web presence, that portal is, and owners have a password and username. They can go in and get the records. That would satisfy this, because the statute doesn't really specify exactly what form or how it needs to look as far as the web presence. It just says you need to have a web presence with your documents on there. And so I believe that would satisfy that if your management company has that option. But what are the records that need to be maintained on the website? Well, it's a lot of the same records that we've discussed, but it's not all the records, okay? So it's obviously your governing documents, right? Your declaration, bylaws, articles of incorporation, rules and regulations, those all need to be on the website. Now, the statute says a list of all contracts to which the association is a party. When this first became law last year, a lot of people were up in arms about this because especially a lot of vendors saying, hey, I don't want my contract on the website. You know, my contract has some proprietary information, some specific information on the services we provide and the costs, and I don't want that out there for anybody to view. Well, the statute actually doesn't say the actual contract needs to be on the website. It says a list of contracts. So what you can do as an association is you just make a Word document that just lists out, you know, you title it association contracts, and you just list out the contracts that you have. We have a landscaping contract, we have a management contract, we have a contract with our attorney, we have a contract with this plumber. You just list out. So the statute doesn't say you're supposed to put all of your contracts on the website. It just says you need to have a list of what your contracts are. And it also says the same thing for bids. It says a summary of the bids received for materials, equipment, or services for the past year. So you're not actually putting the actual bid documents on the website. It's just a summary of the bids received. You know, we received for our plumbing project, we received a bid from this company. We received a bid from this, you know, you list out the companies. And it seems that would satisfy the statute because it doesn't actually say you got to put the actual bid documents or the contracts. It's just a list of those documents of what you have. And then it's not every single official record that's required to be on the website, but as I mentioned, it's a good portion of them. So it's things like your annual budget, the financial reports for the prior years, the certifications for your board members. So as we mentioned, this is your board certification class. You're going to get a certificate. Not only are those certificates part of the official records, but they're required to be maintained online as well. Any contract that would be considered a conflict of interest that still got approved, you know, you might have a conflict of interest where one of the directors, for example, owns a landscaping company, but it's a good company and the association still wants to use them. You just got to disclose that conflict, but the association can still use the director's landscaping company. Those type of contracts need to be put on the website because it's a conflict of interest situation. So just in full disclosure, those need to be on there, but not the other contracts. It's just a list for the other types of contracts. Now, also on the website is meeting notices. So it's the meeting notice and agenda. And the notice must be, in the statute, it actually says this. It says the notice must be posted in plain view on the front page or on a separate subpage, but it's got to be under a label titled meeting notices. Not only is it the meeting notice that you put on the website and the agenda, but it's also any document that's to be considered and voted on by the owners at the meeting. So that's a new change, and you want to make sure that you're following that. That's actually in the statute now for any for any associations that have 150 units or more. But starting in January, that's going to be for any association that has 25 or more units. So you got to make sure that not only are you sending out your meeting notices as required by law, but you're also putting those on your website along with the documents that are going to be considered at those meetings. Now, also required to be put on the website are your milestone inspection reports and your structural integrity reserve studies. Those are new requirements that have been implemented in the law over the past couple of years, and those are required to also be put on your website so that the members have access to those documents. Okay, okay, here we go. I know you all were asking about this. So how do emails and text messages fall within the official records and the record keeping requirements? Well, as I mentioned, you got that catch-all, right, in the statutes where it lists out all the records, the specific records, but then you have that catch-all that says all other written records of the association. Well, there have been there's some case law through the Department of Business and Professional Regulation, the DBPR. They have oversight over a lot of condominium and co-op issues. One of those is official records requirements. And so that catch-all has been used to state that some emails and text messages actually do fall under that catch-all and are part of the official records of the association. And let me give you an example. So there's a case that says any emails or messages that involve your licensed manager. Those are going to be considered official records of the association. So if you got board members or owners that might be communicating with the manager via email, those are going to be considered official records. Now, obviously, communications with your attorney, with your association attorney, those are going to be protected by the attorney-client privilege. Okay, so those are not going to be made available. Those are not available in part of the official records. There's actually a carve-out that says attorney-client protected information is not part of the official records. So any emails that a board member or the manager has with the attorney regarding association legal issues, those are not going to be official records. If your association, and I see this more and more, if your association has their actual own domain, so it's not just a Gmail account, it's not just a Yahoo account, it is, the president at abccondominium.com. That's the example on this slide. If it's if you actually have your own domain, that's considered association property. And so that would be, so all emails through that type of email address will be considered official records of the association. There is DBPR case law that says if it's board member emails and it's just between personal email addresses, one person's Gmail account to another person's Gmail account, and it's not an actual association domain, then those personal emails are not necessarily official records. It just depends on the content. There might be certain situations where, like if there's attachments to them that include association contracts or association documents, that might make them official records. But personal email addresses, just because you're a board member, your personal email is not necessarily opened up and made official records. But that's the general case law on that. But just know that there could be situations that could make your emails open as official records. Now, I will say this: there is a difference between what is an official record of your association under the statute and what might be required to be produced if there was actual litigation. That's two different things, right? The statutes in the Condo Act and the Co-op Act, that just tells you what the actual documents are that are part of the official records. That is completely separate from if there's litigation over some dispute and each side has an attorney and you're in court and the other side issues discovery for all documents related to a certain issue. That could still encompass all of your emails, even if it is from your personal email account, like a Gmail or Yahoo account. So just know that, right? So just know that there is a possibility that any of your emails could be produced in court. So the one thing I always like to tell people is don't put anything in writing via email that you would not want read in open court, right? Because I've seen that before. I've seen that there's some kind of issue going on within a community, and there might be an owner or a resident that's really causing some trouble and getting on the nerves of the board members, and maybe for good reason too, right? And then you see some emails where there's some not so good things said about that person, and those end up coming out in discovery and litigation, and maybe it changes the impression of the case in the eyes of the judge. And so you just want to make sure that that's usually the rule of thumb I give to people is don't put anything in email that you would not want read in open court. So maybe another way to look at it is every time you're sending an email about some type of association issue, say to yourself, is the content of this email, would I be embarrassed or would I be concerned if this actually came out in a court case? So you just got to be careful of what you put in email. I would say for the most part, assume your emails are going to be part of the official records because most of your emails are going to involve the manager, right? Or at least some part of your email chain. So you might have emails between board members, personal email accounts that maybe would not fall under the official records requirements. But as soon as you include your licensed manager on that email chain, there is DBPR case law that says now that becomes an official record of the association. So what I would say is just assume that when you're sending emails, there is always a good possibility that's going to be made available to the owners, at least if not through official records, then it could be if there were a formal legal dispute. Now, there was a law last year. It was House Bill 1021 that actually did pass and has become law now. It says that if an owner has consented to receive electronic notices through email, then those emails addresses are actually part of the official records and need to be maintained in your records, and they are available to the other members through an official records request, but they are not available to third parties. So that's one of those that makes it a little difficult, right? Because we had that question earlier of, well, what if you have something in your possession that's actually not an official record? Well, here with email addresses, it just depends on who's requesting it or who the documents are being sent to. Because if an owner has consented to receive notices via email, the law says that those email addresses are now available to all other members, but they're not available to non-members, not to third parties. So when you're getting a request for documents, you just got to be mindful of whether that is something that should be redacted or not. And that's something I would say you want to rely on your license manager or your attorney for understanding how you should be complying when you get requests for email addresses. Okay. All right, let's talk about penalties for violations of the official record statutes. Now, we talk generally that if you make if an owner sends a written request for official records, you have 10 business days to respond. And if you don't respond within those 10 business days by making the records available, they have the right to seek minimum damages, which is $50 a day up to 10 days. So it's a total of $500 plus actual damages if those records not being provided actually caused actual damage to the person requesting them. So we talked about that, but there's also other penalties, which is the point of this slide and what I want to talk about here. And that is you could have fines by the division. Now, when it says the division, it's talking about the Department of Business and Professional Regulation, the DBPR. They have authority, as I mentioned, they have jurisdiction over a lot of condominium and co-op disputes. And if there's some type of complaint that's filed for an investigation or some type of arbitration case over official record issues, the DBPR does have the ability to issue fines. And I've seen them do that, and they will do that if they feel that that's warranted. Now, in the condo statutes and in your cooperative statutes, and also probably in your governing documents, it says that any dispute, the prevailing party is entitled to seek their attorney's fees and recover their attorney's fees from the losing party. And so that's always a concern right there. So if there's some dispute over the official records and whether they were being maintained correctly or made available correctly, or who knows what the dispute may be, typically the prevailing party is going to be able to recover their attorney's fees. And so you want to make sure the association is not setting itself up to be the losing party in litigation, so that it would then have to pay an owner's attorney's fees. Now, I recently, over the past year or two, in the statutes, there have been some changes that have actually added some criminal penalties to certain egregious violations with the official records. And unfortunately, it's because egregious situations have happened within some associations within Florida. And here's what I mean. There's a statute now that says that any director, officer, or manager who knowingly, willfully, or repeatedly violates the statutes on official records, making them available or maintaining them, that's going to be a misdemeanor in the second degree. Now, I don't want to overly concern anybody. I want you to know that statute's out there, but I also want you to be mindful of the words used in that statute. It says knowingly, willfully, and repeatedly violates. Okay. Now, repeatedly means 2 or more violations within a 12-month period, but it's still got to be a willful violation. So it's not a mistake. It's not, hey, I was out of town. I went on a European vacation, just came back, and I missed this request that was sent 3 weeks ago. That's a mistake. That's not a willful violation. Now, that could still subject the association to the minimum damages of up to $500 if you're not complying within the deadline, but it's not a criminal action, right? For it to be a criminal action, it's got to be a willful and repeated violation where you're just refusing to make the records available. Just know that because of situations that have happened in Florida previously with certain associations, this is now in the law where it could be a misdemeanor. And There's a similar law now on regarding accounting records or financial records of the association. The law says that any person who knowingly or intentionally defaces or destroys accounting records or financial records of the association with the intent of causing harm to the association or its members, that is a misdemeanor in the first degree. Okay, so that also has to be willful, right? It's got to be willfully destroying or defacing accounting records. Basically, someone who's trying to get away with something, right? They know that maybe there was some malfeasance going on, maybe some shenanigans going on with the financials, and so to cover it up, they're making some changes or destroying the financial records of the accounting records. Just know that the law says that is actually a crime. That's a misdemeanor in the first degree. And if you do such, in the statute also says that if you're doing such things with the intent to escape detection, arrest, trial, punishment, then that's a felony in the third degree. So if you know that if there's a person out there who did such things and now they're destroying records to not get caught or to avoid maybe being found guilty at a trial, then that's actually a third degree felony. So those are now the penalties that are in the statute for non-compliance or willful violations of the official record statutes. Okay, I think this is my last slide, and it's an important one. And so what this slide is addressing is that starting last year, the statutes were changed to require, if you're a condominium or a cooperative and you receive an official records request from an owner, that not only do you have to reply by making the records available like I've been discussing, but now the law was changed last year to state that you also need to provide a checklist where you list as the association what records were produced or what records were not produced. And so what the statute says is, in response to a written request to inspect records, the association must, at the same time the records are produced, provide a checklist of the records made available, and it must also identify any records available. And this checklist is also an official record, right? So whenever you have these checklists for owner requests, those need to be maintained in your records for 7 years. Now, the point of this, I can tell, the point, some of this may seem a little overbearing and you're wondering what, this is over-regulation, but there's been a lot of disputes over records requests and what was produced and what wasn't produced, and it turns into a he said, she said. This is one way that's been put into the law to try to avoid those type of he said, she said disputes, right? It's like simultaneously when you make the records available, you're supposed to provide this checklist, right? And if you do that, and if the owner doesn't object, and then it can be assumed that the checklist is accurate, right? We've told you what we've produced, and we've told you what we haven't produced for whatever reason. And that's why the statute says delivering a checklist, according to the statute, creates a presumption that the association has complied with this paragraph, right? Here's what I would suggest regarding this. When you get this checklist, can just be a simple Word document or Excel spreadsheet form, where on one side you're listing what the actual requests were, and on the other side you're just having a checkbox of was the record produced or was it not produced. And if it's not produced, you'll just want to list the reason why. Maybe it's the example I gave, where you have an owner that's requesting to know all the names of all the tenants in the association. Well, there's no obligation to have that record, so you would check the box of not produced, and you would just say this is not something that we're required by law to maintain, right? But here's my suggestion. When you're making this checklist, use the exact wording of the owner's request, right? Because don't paraphrase it or don't put it into your own words, because their request is their request. And maybe their request is ambiguous. Maybe their request, you can't really tell what it is that they're asking for. And so if you get a request via email, or if you get a request via certified mail, my suggestion is you just copy and paste exactly how it reads. And if a document's not produced, you can say, we don't understand this request. This doesn't seem to be asking for a document that we're required to keep, or we don't understand the exact document this is asking for. Okay. I'm just saying that as a way you don't want to, I would say avoid putting it into your own words to try to guess what the owner's asking for if it's not clear. All right. So you got to make this checklist, but you're not required to guess what the owner is asking for. You can use their own request, and if it's ambiguous or you don't understand what it is they're asking for, you can say that in the checklist. And then it's up to the owner to send another request clarifying it, or making it less ambiguous or easier to understand exactly what it is they're requesting. So that's just my 2 cents on that kind of checklist requirement. I think that covers the my portion of it, and so I'll stop sharing my screen and I'll turn it back over to you, Emily.
Thank you, Hans. Alicia, I know there were a couple questions in the chat. I know we need to move on to the next section soon, but there were a couple on Facebook about Facebook. So you were going to ask those.
Yeah, Hans, the chat is asking about if having a Facebook page counts as having a website. And then also, can you speak to anything about managing a Facebook page, if there's any ill-advised information or, conversation that can sometimes happen on Facebook? Do you have any guidance on that topic?
Well, so it's a good question. I presume a Facebook page would count, and the reason why I say that is because the statutes do not say that it doesn't. It doesn't say you must have a website excluding these types, social media. It doesn't say that. So I presume a Facebook page would count as an association website if you're able. And I'll be honest with you, I don't have Facebook, so I don't even know nowadays if you're able to even, if Facebook allows you to put documents on there and to organize it in the way the statute requires by but if it does, then yeah, I would say it would count. My caution to that is it needs to be an official association website. So if it's just a board member who has created a, part of the board members' Facebook social media presence is dedicated to the association, I would just say be careful of that, because once that board member is no longer on the board, they really have no authority to act on behalf of the association. I get involved in a lot of disputes where you have an owner who's not on the board but has created a website that makes it look like an official association website, and they're saying all this stuff and posting all this stuff that to a third party, they may not know this actually isn't coming from the association. This isn't coming from the board. So my advice would be don't use Facebook just because it might comply with the statute. I would say don't use that, because it could present a lot of problems where if the administrator of that Facebook page is no longer affiliated with the board in the future, or it could just cause confusion because a lot of owners are doing this on their own. And so then, an innocent owner or a new purchaser, a third party that just doesn't know exactly what's going on, they're confused. There might be 3 or 4 website pages dedicated to the association, and they can't figure out which one's the right one. So all that to be said, I would say just have it a standalone website or a portal through your management company.
Thank you, Hans. That's great advice. Awesome. Very good information. Thank you so much. Next, we're going to move on to levying of fines with Chuck Schumacher. So Chuck, if you want to share your screen.
Hold on a second. Everyone view. Why is it not that me? Here we go. Share.
While he's looking, can I ask a question that didn't get answered in the previous session?
If it is very quick, because we've got several sections left.
Well, I just typed it there again. Can I recover the cost that a lawyer has charged me when he was subpoenaed for information?
That's a good question. That's probably one I'm not going to be able to answer to your satisfaction on this webinar. I mean, there's a lot of moving questions. So unfortunately, I
Okay,
mean, feel free to reach out to me after the presentation, but I don't think that's something that I should spend time here answering.
all right, thanks.
Thank you, Hans. All right, Chuck, take it away.
All right. Good morning. Thank you all for taking time out of your day to do this newly required certification for the state. And thank you for your time to your communities as well. I know it's a thankless job all in all, but thank you for doing it. Fining policy. So fining can be tedious. I usually like to say is how do we not fine an owner? Like how do we not get to that point? So a lot of times, education is the best place to start. Sometimes, Mrs. Jones, who keeps commandeering the pool chair with her towel before it's time that she's actually going to use it, that's against the rules and regs. Sometimes conversations straighten those out versus, that the owner or tenant who keeps parking in the wrong parking spot because it's closer to their door and they just do it because they can. So sometimes education is the best way to start. Unfortunately, when you exhaust those options, then you come down to the levying of fines. So the violation process that's in 718, the association has the right to levy a fine for failure of the unit owner or its occupant to comply with your deck, your bylaws, or reasonable rules and regs. So first step is the notification. So unit owner is notified in writing, specify what that violation was with a required time frame to correct the violation. That time frame is I typically recommend that time frame be in bold print, as well as also what the potential fine might be if it's not corrected, so that it's documented. That notification, the statute requires U.S. mail, hand delivery. I would recommend that if they've elected to receive email notifications, you add that in as well. So you got email. I would also recommend hand delivering it. And if you mail it, I'd also do like certified mail with return receipt. That way there's no question as to did that notification actually arrive at their door. Then the violation is not corrected within that specified time frame. The board of directors has to discuss it at a notice meeting, and then they decide whether to extend the remediation period or proceed with assessing the fine. That fine that gets assessed, obviously, the board is going to, they could maximize $100 a day up to $1,000, and then that has to get sent to a fining committee that consists of at least 3 members. They can't be affiliated with the management. They can't be related to the board. And if that committee is not established, well, then obviously the board's going to have a secondary meeting to appoint that committee to hear this fine. So once that fine is now agreed by the board, you've got your committee that's not related in any way to management or the board themselves. It's 3 and minimum three individuals. That hearing date is then set. And it is sent to the owner to make them aware of that so that they can attend and speak their part with at least 14-day notice. So after that hearing, the final notice of decision is sent. Now, if that fining committee says, you know what, I don't think we need to fine Mrs. Jones for $1,000 for her 10 straight days of leaving her towel on the pool chair. The fining committee says that's outrageous. So they say, forget it, we're not doing it. That matter is now dead. So it's not something that you can go back on and the board can go back. It's a dead matter. Now, if that owner or tenant who's been using the wrong parking spot and that fine has been assessed and they went to the hearing and they spoke their case and the fining committee said, well, you've been using that spot when you weren't supposed to, so therefore this fine sticks. Once that's decided, that is then sent to the owner in writing, which they have 5 days. It is due within 5 days of it being sent to them, the date of the notice to them. So standard practice is that first notice goes out of, hey, this was assessed against you. Here's a 5-day notice and a secondary. Then after that 30 days goes by, still no payment. Obviously, you're going to want to turn that over to your association's attorney for debt collection and go that matter. So that when it comes to those fines, and then let's say 90 days goes by and you still have not received that money back, now you have the opportunity to go in and take away amenities. So now you can take away, if you're on a key fob system, you can take away their fob access to the pool. I've seen communities in I've been managing communities now for over 20 years where they actually restricted the front gate access to require that owner to use the guest lane versus using their sticker on the side of their car for the gate to go up. So there's a number of different avenues that you can use there. And those are the ones that you're going to want to explore with your association's attorney to figure out what the best policy is going to be to ensure that you're applying your rules and regs and you're fining equally across all the members. You don't want to have a case where you only find one guy for this and then you don't find this one for that, and it's both of them are the same infraction. So that's kind of one of the things. One of the other things is if you are a member of CAI as a board, if you go onto the website, there's a ton of different resources on there that can help with finding policies, best practices. Highly recommend that you take a look at those, because there's a lot of case study in there as well that will point out maybe a similar situation that your community is going through that somebody else has already gone through with their case law that you can find educational. There's not really a ton that you can really say. It's not very interesting because nobody really likes to fine. Is a fining committee required to have on a board? If the board assesses a fine, then yes, you are required to have a fining committee. That is standard practice. The board can't assess the fine and then it just sticks. It has to go to a secondary review, like I said, of at least 3 people not related to the board or the management. I think that's, like I said, fining's not got a lot to it there. It's in 718. And it's really kind of one of those things that I highly recommend that if you do get to that point, that you also involve your association attorney from the get-go of what's going on, because you're going to want any type of violation. You always want to make sure you have as much backup information as possible. So if you've had any correspondence with the owner or the tenant or both on whatever the violation was, you want all that information backed up. You want your board meeting minutes from what was discussed at that board meeting, the decision to send it to the fining committee, the process in which you forwarded that information to the fining committee, and what all of their findings were and what the action was. So all that needs to be packaged up neatly and then reviewed with your attorney. Any other questions on fines? Like I said, it's kind of a boring topic compared to some of the other stuff that we've seen. Can the master be considered the fining committee? Well, it depends. Is any of the master association members that you would put on that? If it's specific to your condo per se, I would stick with your owners within your condo, and then ask your attorney if you can put other people onto that committee. But if it's a master association rule is getting violated, it's theirs to enforce, versus if it's your condo association and that owner is the one who has violated the rules, I would stick with your members in your condo to be on that fining committee, which I know is hard to do because no neighbor likes to fine another neighbor, but it is one of those things where you have to enforce the rules and regs in your documents equally. Is a fining committee standing or ad hoc for each fine? That could be your policy. That could be the board's policy. But whenever you appoint that committee, you're going to have a board meeting as well. So if the board at the board at their organizational meeting after their annual says, we're going to appoint the landscape committee, we're going to appoint the fining committee, and that is set for the year, then that's set for the year. Now, if you never really have an issue where you're enforcing rules or fining, and that committee is thrown together as needed, well, then your board's going to put out a notice, and then you're going to have a board meeting to appoint that committee, and the board could decide at that point in time that this committee is only for this specific issue, and then cease to exist after that, and then a new committee is appointed if another violation comes up. Excuse me. Yeah, like I said, that's kind of the short end of the fining policy. Moving into notice and requirements, which I know is a fun item. Everybody should, as we know, board meetings must be posted in a conspicuous place in the community at least 48 hours in advance unless an emergency. So an emergency would be like, as all of us know, whenever we have a hurricane, state of emergency, it's been enacted by the state, county, city, whatever. I can tell you, being in Naples, we've had our fair share over the last 3 years. I don't want to say we get used to it, but we're kind of used to it. So in those type of instances, when you have that type of emergency situation, you do have less than the required time because the board is needing to go over whatever the hurricane preparedness plan might be, or your evacuation plan, or you're rounding the board up to tell them who's left in the building, who's not, what procedures have been followed, what protections are in place, and those type of things. It's not necessarily a business meeting per se, as it is more of an emergency meeting. Same thing after the storm passes, you're meeting with your board to go over whatever types of damages you sustained, building reports, resident reports, as those things go forward. So it's not necessarily business versus the after effect. And then your members' meetings typically require 14 days notice by mail delivery, or if they've elected for electronic transmission. Some meetings require more notice, such as those for special assessments or rule changes. Notices for these board meetings must be posted in a visible place in the community at least 48 hours before the meeting. Again, unless it's an emergency. If it's not in a public place, it must be mailed or delivered to each member at least 7 days before the meeting. Again, unless it's an emergency. So, like with a lot of our towers down here that were along the beach after Ian, nobody really had a place to post their notice because their mailrooms that were on the ground floor were gone. So you were having to email them out or post them on your website, which if you're posting on your website requires 14 days. And you're emailing, if they agree to the email, you're following that 7 days. Yeah, we got a little typo on this. So the COA is, as we know, January 1. If you're 25 or more, you're going to have your website. You can post your notices and agendas for those meetings at least 14 days in advance. Any documents that will be considered must be posted at least 7 days prior to that meeting. The agenda items must be specific to that meeting. If you're considering regular or special assessments, you state the purpose of the assessment, consider and provide an estimate of the costs, your goods and services. I know Hans had just kind of covered all this, so I don't want to regurgitate it. But all that has to be ready for membership review. And then, of course, your condo members can choose to receive notices by email at an address other than their physical address. So if they elect for that, they want to do email, that's great. Sometimes it's easier to email everything out versus trying to mail it. Yeah, Emily said we'll fix that typo there before we get to the next one, before it goes out. So here's kind of the timeline. This is kind of a great flow chart per se, as it pertains to what type of meetings you're doing. So this first slide, we're going to see now, are we doing an owner meeting? So kind of like an annual meeting, you know, are you greater than 10 doors? Nope. Well, then you're going to look at your bylaws to see what your process is. You're greater than 10 doors? Yep. Well, then you go, what type of items are you discussing here? Are you doing, let's say the other vote would be like if you're going to do a common area change that you need the membership to vote on, you're changing any type of declaration, bylaw, whatever. Are you voting for directors? Is there a budget that needs to be voted on by the members, or anything else that has to go along with that, as dictated there in your documents and statute? So 60 days out, that first notice goes. So it doesn't mean that it has to be received by them 60 days prior. It just means that your postmark has to be 60 days prior. So that's always the important one, that sometimes people are like, well, I didn't get this 60 days prior to the meeting. No, but the postmark on it showed that it was 60 days prior to the meeting. And then 32 to 14 days, you're either going to send your agenda, purpose of the meeting, and then if there's any ballots that need to be voted on by the owners, those things are going to go out. That's usually, that 32 days kind of marks the point where you've had, if you're doing an election where you received your intent to run for the board, and then I believe it's five business days after that, they have to turn in their candidate information sheet. So now you've assembled all that, and that's kind of that 32 to 14 days is when you have the possibility to send it out. you're dead ended at that 14 days prior to that meeting to get out that proxy, your ballots, the budget, all those things again have to be postmarked 14 days prior, or emailed out to the membership. I've seen communities where they just do it by email and all the members have elected to do that. They're on a much smaller scale. But then it's just basically emailed to everybody. It's done, and then they post them to their website. And then you have your owner meeting and then your vote. And then our next slide, which is, again, another great flow chart to use, is your board of directors meeting. So meeting notice agenda to owners, your request for comments and questions, open meeting share rules. This is a good one as well, because now most agendas are going to call, because the statute has changed to allow membership to ask questions that may be outside of the items that are on your agenda. And then you can see as it flows, you can call for an account, you approve the agenda, you can move to an open floor, you can close the meeting. Down here on the bottom, we have motion to open, then second a topic, board consider, open floor for new observations, limit the questions to 3 minutes, which would come right out of your Robert's Rules of Order. And then you move into board vote. And then again, it kind of flows you back up to the top. So Condo Association meeting notice guide, as it states in 718. These are great as well. Standard board meeting, you have 48 hours posted, except in emergency, or if you have nowhere to post it, then you're handing that out 14 days prior. Budget meeting, again, this is another great one. That's 14 days prior, delivered UPS or electronic notice. Post notice and state the annual budget will be considered. So in your budget mailing that goes out to all your members, you have typically you have your agenda. You'll have any other backup information like your operating budget, and then maybe your reserve budget, and then a schedule of what your reserve projects would be for that year and the cost. Whereas this is when you post that notice, you just have to post the notice only. So, I mean, you can, if you want to, put your budget and everything else back up wherever you're posting it on your property, but this only calls for posting of the notice by itself. Annual owners meeting with elections. Again, that's kind of what we covered already. You had 60 days prior. Then your candidate statements, intent to run for the board, and then their candidate sheets. Voting then opens 34 to 14 days. And then, of course, your annual meeting notice must be out by that 14th day if you choose to wait until that point in time. Non-emergency special assessments, 14 days. And then your committee meeting. So again, kind of going back to that finding committee, if your board's got to throw together a finding committee and the manager's found 3 people not related in any way that have volunteered their time, that's a 48 hours in advance to pull that meeting together. Executive meetings. This is always a great one. So you've got 2 closed meetings. You've got one that your attorney's present, and then you got one that your attorney's not present. And those are closed to the membership. 2 reasons they're closed to the membership is, one, it's proposed litigation that the board is considering or defending against. And the other one is an employee matter. So if you're talking about terminating an employee, or the personal issues that an employee has that have to be relayed to the board for, I don't know, let's say a medical leave of absence or anything that was personal to that, you would not bring that out in an open meeting in front of your membership. Same thing goes for any type of compensation that they receive. Those type of conversations are considered private as it regards to the employee. So you would hold those in a closed meeting. All you have to do is post a meeting that there is a closed board meeting on X date, 48 hours prior. It doesn't have to state what will be discussed. You could just post that. I would actually recommend that if you're going to have a closed meeting, just have your attorney present for both. That way you just put on your notice that the board's having a conversation with legal representation at X date and time, and that's all it needs to be. And it's protected by attorney-client privilege. Let's go next slide. So, sorry. Minutes. So the minutes are always something that I get questions on. So besides being a community association manager, I also am the vice chair for the Collier County Planning Commission. So I'm the planning commissioner for my district here in Collier County. Our board meetings are dictated, and the minutes that we receive from them are 300 pages long. So your board of directors meetings don't have to be that. Like your board of directors meeting it's very specific to the business at hand, what decisions were made. It doesn't have to be word by word of what everything was said. You want your motions, your seconds, and what the total vote was indicated in those minutes as they relate to the subject that was being discussed on that agenda. The minutes contain obviously your date and your time, any type of the vote count for each member, and then anybody who said, I'm not voting on this, or they abstained from voting, and the reason for that if they abstained from that vote. Kind of like if we go back to the fining thing where the board votes on the fine and Mr. Jones says, I'm going to abstain from voting that because I have a personal relationship with Mr. Smith that we're talking about fining $250. So that would be a reason to abstain from that vote. Those minutes must be kept in written form or in another format that can be converted to writing within a reasonable time. So if you're going to digitize them, put them on your website, you got to be able to print them off as well. And then, of course, the other meeting minutes that you have to keep, and it's kind of a best practices, your ballots, your sign-in sheets, your voting proxies. So as you're going through those elections, you've got, I know Hans is going to go over that in a little bit, but as you're going through your elections, you've got legal matters. You're discussing legal matters, or you're discussing employee issues. To discuss bids, if you're going to discuss bids, you'd be discussing that in an open meeting. So again, it's a check with your attorney, but it's more than likely going to be a no. For the closed employee meeting, can it be a condo maintenance person employed by the management company? I would think that if your management contract, I don't want to make it too convoluted, but typically the management contract, unless the maintenance guy is like part-time and split in between multiple buildings, and then his time is billed by the management company, most management contracts, the staff that's on site at a condo would be the staff for that association, with the payroll being a pass-through through the management company itself. So they're paid by XYZ management company, but they're actually the employee of the association itself. And if the contract dictates that the board has decision-making power with regard to employment of staff on that site, then I would think that closed meeting would be applicable, because you would be discussing that employee with the management company, and you wouldn't be discussing that openly in front of other members. Let's see. I think that's kind of it. Can the board make a vote on a material alteration? Does it need to be voted on by the membership? That's a great question. I'd refer your documents. I had one community where the documents allowed the board to make a material alteration up to $25,000. So definitely check your documents. Get with your legal and check the statute and make sure that everything is correct there. But typically, you're going to need a membership vote on some type of threshold for a material alteration. Great. Well, that kind of wraps that up. So if there's no other questions, or if any other questions come up, please feel free to shoot me a message in the text, or wait till the end and we'll go back over it.
We'll step into Milestone and Sears, which is at the core of the condo safety law. So let's start with the milestone. The following type of buildings need a milestone inspection, and that is the same for condominium buildings and cooperatives, 3 stories and more in height. And there were certain limitations in place. If these buildings are either single family, duplex, triplex, or fourplex buildings with 3 or fewer habitable stories above ground, they are exempt. Example, when we have a townhouse attached, 4 units with 3 stories, those buildings are exempt. And the important item is currently, as of now, the law is not consistent between Sears and milestone requirements. So don't confuse the two with each other when it comes to the exemptions. Up to 4-unit properties are exempt from milestone, but only up to 3-unit properties are exempt from Sears. However, that will change on July 1st if the governor signs HB 913. And the text in the bill says, speaking about the regulation, that this paragraph does not apply to buildings less than 3 stories in height, single, 2, 3, or 4 family dwellings with 3 or fewer habitable stories above ground. So that is the difference now. Habitable means living units. So for an example, you would have ground floor parking and 3 residential floors on top. Those buildings will be exempt now. But we need to wait and see for the governor if he's gonna sign it. We hope so. So components which have to be inspected are defined in the law. The primary structural members, which is the structural element designed to provide support and stability for vertical or lateral loads within the overall structure. And the law defines a primary structural system, an assemblage of primary structural members working together to support the building's load. So in essence, when we are looking at let's say a high-rise building, of course, we are looking at the foundation. We look at the concrete subfloors, the slabs. That can be examined. For example, when we walk into a garage, we can observe the unfinished ceiling, investigate the ceiling, which we also call subfloor. We can investigate it for structural issues. Furthermore, the milestone would also include that we investigate the building envelope. If we are dealing with high rises, we are recommending the use of drone to investigate the higher floors, which are simply not visible to the bare eye from the ground. However, we also go in at least 30 to 35% of units. And not only on the interior, we're going to step outside on the balconies to look up on the building, to observe building envelope issues we can see from balconies. Of course, also the balcony surfaces will be examined, and most often we discover water intrusion in balcony areas. So that's one of the sticking points for us. Who is qualified to perform a milestone inspection? An architect licensed under Florida Statutes 481 and an engineer licensed under Florida Statutes 471. Since enactment of the condominium safety law, I have not seen a single architect having performed a milestone inspection. So I'm still waiting to see a milestone signed by an architect. And in my opinion, architects are not the best choice to do a milestone inspection. They are designing buildings. They are not necessarily trained to discover structural deficiencies unless they specialize on these exams and become forensic architects. And those architects would be qualified. But your average hometown architect is probably not the best choice. So you should stick with engineers when you choose your provider. The scope of work for milestone inspections is very clearly defined. First of all, it needs to be sealed and signed by a PE. We need to describe how the inspection was conducted. For example, we walked the entire building by foot. We inspected the interior staircases, exterior staircases. We observed balconies. We stepped on balconies. We observed higher floors either with binoculars or by deployment of a drone. We were on the roof. We inspected elevator pits. We inspected other components of the building. So we want to have a nice description how the inspection was performed. Then, of course, we need to identify the substantial deterioration if we find any. And also the description and the extent. And here we are somehow marching a fine line. And I just recently did a milestone inspection with our engineer, and I am trained to see structural deficiencies, of course, as well. But everyone has a different level and extent and threshold, maybe in terms of seeing damage. So I'm usually the one who points out every little crack, and the engineer says, hey, cool down. That has nothing to do with structure. It doesn't look nice. It looks horrible. It should be taken care of, but it would not affect the building's structural safety. So, of course, this building will pass the milestone inspection, but should we still recommend and the steps to repair the damage, maybe even list the identified damage and recommend steps? I think, yeah, absolutely. That is good practice to help the client identify issues which would become a problem later down the road. So we, for example, had a 5-story building, which is built directly on the water and needs a retaining wall to protect the foundation of the building from water intrusion. So the retaining wall keeps up the soil on the building side and takes the brunt of the water from the lake side. One part of that retaining wall is concealed as a planter and is in the process of leaning over. So we can see there is some settling going on for the retaining wall in that lake section on the corner. And of course, that is not at the current point in time a danger to the building. The structural integrity of the building is not compromised yet. But is it good practice to tell the association, hey, you need to do something about this? Because when we come back in 10 years, then we already might be in trouble with this building and have structural issues going on. Of course, we also need to include a statement if dangerous and/or unsafe conditions exist. If they exist and are a problem, they will influence the structural components of the building, the structural safety of the building. We have to identify the components and then decide if they need further investigation. And further investigation would mean that the building might fail phase 1 milestone, and we have to go into phase 2, which can include destructive testing. So here we have the 2 phases on one slide. Phase 1 examines the building non-destructive. So we only observe. We don't do any stucco sounding, We don't do any drilling or any destructive testing, nothing. It's just a visual observation of all major structural members. Once that inspection is completed, the engineer must issue a phase 1 milestone report and deliver this report to the association. However, the engineer also has to submit it to the local building department. And here I want to step right away into Sears a little bit, because I get often the question, hey, will you deliver the Sears to the authorities? Will you do this for us? We don't have to. So don't put those two, Sears and Milestone, in one pot. Sears does not ever have to be delivered to a municipality, to the DBPR, or to any other agency. The Sears is your document which serves the board and the association. It will not be reported to any agency or municipality. However, the milestone report will have to be submitted to the local building department. If during phase 1 substantial structural deterioration is observed, the building now has to move on to a phase 2 inspection. And as I mentioned before, phase 2 will involve, most likely, destructive testing. And the engineer will determine the extent thereof. And again, that can be when we discover a lot of structural delimitation with water intrusion. So that would be maybe stucco sounding. When we discover cracks in subfloors, or water intrusion in concrete elements with exposure of rebar, spalling of concrete. These are conditions which are concerning, and those will be investigated, and then we will write up a plan how it can be remedied. So if you pass phase 1, you are off the hook for 10 years. And as mentioned before in record keeping, keep that milestone report in your condominium files or cooperative files. It's very important. When you have 2 different providers for milestone and reserve study, I would also recommend to give the milestone report to your reserve study provider, because a good provider will incorporate the recommendations of the engineer for the milestone into the CS report. Because we're going to get to this a little later, one of the components which are state mandated in the structural integrity reserve study is structural reserves. And the recommendations from the engineer to fix the building from a phase 1 to phase 2 procedure should be included in the reserve study. So the timeline of the milestone inspection is regulated to 180 days. So first of all, we have the requirement that a milestone inspection has to be done at the 30th birthday of the building. However, if the building department decides that building is too close to the water and could possibly deteriorate faster than a building which is miles away from saltine air, the building department can request earlier, usually at the 25-year marker, to perform that milestone. So they're going to send a letter of request to the association. And from there, the association has 180 days to initiate milestone phase 1. If the phase 2 is required, an additional 180 days after phase 1 was submitted are allotted in time frame during that time, the engineer must submit a phase 2 progress report. Why progress report? Well, if we're dealing really with significant issues, most often it's not even possible to get the second inspection scheduled. Sometimes you need to send probes to a lab. Sometimes you need contractors helping you do the destructive testing. All this takes a lot of time. All these decisions have to be quoted, go through the board decision process, and that is why they are allotting another 6 months for a progress report. And then in that progress report, the engineer will write up the timeline for completion of the phase 2 inspection. And that all goes together with the building department. So this is, once you fail phase 1, the building department will loop into everything what is happening in the phase 2. We often get the questions of reports which were issued before the new condo law came out, if they are valid or not. When the Champlain Towers collapsed, there was a time gap between the collapse and the enactment of the condo safety law. During that time, we had a lot of clients who voluntarily requested so-called building assessment reports. And high-rises usually got building assessment reports as well every 5 to 10 years. So that was common practice for usually high-rise buildings. And so they were called building assessment reports. And so we got a lot of time the question, hey, can't we use that report? It's like a milestone report. And yes, of course, in the beginning of the condo safety law, probably the first 1 or 2 years, these building assessments report were renamed, sometimes for a small fee, depending on the engineer, into a milestone report and could be used as a milestone report. Meanwhile, the time frame, in my opinion, between these assessment reports happening in 21, 22, and now the time frame is too long. So I would not recommend to convert these building assessment reports into milestone reports. And then we also got a lot of times the question if mixed-use buildings, who would be responsible for ordering the milestone report? So of course it's the association. I think the question stems from the confusion in the beginning of do 2-story buildings within a 3 or 4-story association have to be included in the milestone. So there was a lot of confusion. And maybe even mixed-use buildings is the wrong expression. I would say mixed-use associations. Very typical often on Siesta Island, for example, Siesta Key, where we have often associations with a mixture of villas, mid-rise buildings, and maybe a high-rise tower. And so there was a lot of confusion. Who orders that? Do we order it for specific buildings for more? So maybe that question in one of the next presentations we should refine. So additional rules. An association that is required to complete a milestone inspection on or before December 2026 may complete the structural integrity reserve study simultaneously with the milestone inspection. So that means the legislators said, yeah, okay, we can extend the Sears deadline, which was December 31st, 2024. We can extend that deadline for the associations who are due to have a milestone by the end of 2026 to couple the 2 assignments together. if 913 is signed by the governor, we need to go through these passages and see if there are any significant changes coming up in the timelines. And another important issue is that milestones do not investigate based on a Florida building code. We don't go to a building and see if it is compliant with the FBC. If that would be the case, pretty much every building which was constructed before the current FBC from 2023 would fail the milestone inspection. So keep that in mind. These are questions we get very often. Well, this is not in line and this is not up to code. For example, railings, it's a big issue. Railings have to be 42-inch high, and between the pickets may not be more than 4-inch. And most often, 30-year-old buildings do not comply with the Florida Building Code with these railings. So it's obvious that you see that they are really not up to code. So we get that question a lot. Hey, that's not up to code. Wouldn't you write that up? No, we wouldn't. First of all, railings, believe it or not, are not considered a structural component of the building. And second of all, as I said here, the FBC is not within the scope of work for the milestone. Speaking of railings as a structural component, of course, it has nothing to do with the structural safety of the building. But most often we say, oh, goodness, railings are so important that a lot of people often say they belong to the structure. Should you, if you have problems with your railings, should you do a load test on railings? It's highly recommended because railings are high liability if they fail. That more or less concludes the milestone section. And before I'm jumping into structural integrity reserve study, I would like to answer questions in regard to milestone. If there are any.
I'm not seeing any that you haven't answered, I don't think. If you do have a question, since we do have a little bit of time, you are welcome at this time to come off mute and ask your question.
I have a question.
Courtney, go ahead.
Yeah. So doors and windows are not considered part of the milestone, or is it the Sears? What are the two? They don't look at those for the structure. Is it structural integrity? I'm not really sure which one.
Oh, the milestone inspection does not consider
Okay.
windows and doors.
So question then, if they don't require doors and windows, but then we have to redo all of our siding because the siding has to be, that is failing, that has to be redone. And then the engineer says, well, we have to take off all the doors and windows. Otherwise, we cannot guarantee when we seal it back up that it's going to be watertight unless you do all new doors and windows.
Correct.
Okay, so does that become so at that point, do you have to have owners vote if they want to do the windows, or is it just at that point it's a fiduciary responsibility because we can't go pay, millions of dollars to have siding redone when we don't have guaranteed work?
Correct. And from an engineering standpoint, absolutely correct. You have to take the windows and doors out to really make sure that your flashing around the jambs is in place. And yeah, you need to install your Tyvek, your insulation and everything. So that's absolutely correct from an engineering standpoint. From a milestone standpoint, again, windows and doors have no influence. But when you have to perform work to save your building envelope, do the windows and doors then automatically come into that? Yes. From a structural integrity reserve study standpoint, we first need to look at the documents. We need to see if your association is responsible for doors and windows, or if the unit owner is responsible for doors and windows. And that is something where we are permanently getting into trouble. Well, we are not getting into trouble. The associations have a problem on hand they have to solve, most often with their attorney. Because if the unit owners are responsible for doors and windows, and the association has the responsibility to guarantee a watertight building envelope, then we have a problem.
That's the problem we're having right now.
And that is a problem you will have to solve with legal counsel.
Okay.
Because you need to pretty much force place on the owners the replacement of doors and windows. And that is the added layer of trouble. Let's say 50% of your owners already replaced their windows. They have impact windows in there. So that is something to work with the contractor and the engineer and the supervision of the construction to take these windows out, safeguard them, and put them back in.
But not if they're unapproved windows. We had people that did that and they were not approved windows. That did not have the approval of the association or the board to do those. So those people, they're saying, well, sorry, you shouldn't have done that. I guess it just becomes the issue is what do you do when, and I don't want to get in the weeds, so I can stop at any point, but what do you do when you have an uninvolved ownership that won't vote? Nobody wants to spend the money because we're already have to do the siding, but you have to do it. So it's like, when does it become fiduciary and you have to force it on them versus, because we have units for sale that would probably not vote for this. And so you can't even get a vote. We can't even get a vote that would be, we're kind of stuck in a rock and a hard place. So I guess I need to talk to our attorney about that further, but it was just kind of a question I keep asking. When does it become, no matter who owns the doors or windows, fiduciary, which makes it legal, which makes it, we can do that as the association and then put it into the assessment.
Yeah.
Sounds like it's more complex. I just have to go back to our attorney. I didn't know if there was a straightforward answer.
Unfortunately, there isn't, and it becomes a legal issue. You need help from your association attorney.
Okay.
How to handle the situation.
Okay, thank you.
Of course. Any more questions on milestones?
Patricia, there's another question in the chat. It said, and so from your experience, is the demand for licensed engineers and qualified contractors causing an issue with completing these requirements from what you've seen?
Yes. Yes, absolutely. We do not have enough engineers. And again, the lawmaker tried to say, oh, architects can do it too. But again, so far I have not seen one single milestone report signed by an architect. We don't have enough structural engineers, that is for sure. And in the contracting world, we are experiencing problems as well. I mean, in insurable valuation, currently, we are even including sometimes multiplier on labor and material because specifically because of the storms, it is still ongoing. There is so much more work to be done in storm damaged properties that it's not easy to get contractors. I recently was calling a good friend who owns an electric company and said, hey, can you come by, fix my lights? And it took 6 weeks among friends. And also AC services, roofing quotes, often 2 or 3 months to just get a quote. So yes, the whole construction market is in uproar, and we have a lot of associations, trouble getting the work done. Usually from the milestone scheduling point of view, we don't have issues. So, and also the first big run of our milestones is calming down. It's not as bad as it is with the Sears. The Sears really had that hard end line for all associations, December 31st, 2024. But the 30-year milestone is a little bit more spread out. and the first big swing is over. They still are coming in a lot, and usually for us specifically, we don't have problems scheduling milestones. Any more questions? Otherwise, we're gonna move on to structural integrity reserve study. And by law, this means a study of the reserve funds required for future major repairs and replacements of the condominium property performed as required under 718-112. These years determines the financial reserves needed for major future repairs. It is required every 10 years for condominium with 3 and higher habitable stories. Okay, so that already changed. 3+ habitable stories. Is this sufficient to satisfy the law by having a series every 10 years? Yes. Does a reserve study in year 2 to 9 look any different than a Sears? No, it doesn't. There's a small difference. We're going to get to this later. Some clients still think between years 2 and 9 they can go back and do things as we did them years ago. And you only need to comply with that Sears in year 1 and year 10. That is a mistake. I also think that what the lawmaker did here with 10 years is a stretch. It's way too far apart, in my opinion. And I would have opted for tying the requirement for a reserve study to 718-111, which says an insurance appraiser has, an association has to get an insurance appraiser every 3 years. That would have made way more sense to couple these two things together. But again, they did it every 10 years. I think it's not sufficient specifically for high value properties, high rises, multi subdivision components, big country clubs with high rise property. They all need to do the reserve study more often. So everyone now who already got the Sears done comes back to us and says, oh, we need a new Sears. No, you don't. We're going to do a normal reserve study, but it still will be compliant with structural integrity reserve study laws. So the condo safety law tells us how the reserve study has to be structured. So the Sears or the reserve studies ensures that reserves funds cover structural repairs and prevent financial shortfalls. Just a quick look at the legislative requirements on a countrywide level. You can see here, it's quite interesting. The West has more funding requirements than the rest of the country. The green states here have statutory guidance. A lot of the flyover states have nothing, no requirements, because there is not a lot of condo density. But here you can see Florida, Tennessee, and a couple others. They updated their statutes since June 2021. So Florida was on the forefront with that, and a couple other states adopted Florida condo safety law. So let's talk a little bit about the components which have to be included by state law now. So this is the structural integrity reserve study portion, the structural non-waivable portion of your reserves. First of all, the roof, of course. Structure, as we discussed in milestone, included the load-bearing walls, other primary structural members, and in general, primary structural systems, as those terms are defined in 627. This goes back to engineering and the milestone. And now we are pretty much going away from the structure. And here a lot of people say that really doesn't make sense. because they included fireproofing systems, plumbing, electrical, and these three, that what we call MEPF services, mechanical, electrical, plumbing, fire services, in my opinion, have nothing to do with the structure. And when you look at the Champlain Towers, the AC was running, the light was running, they had running water. That didn't have any effect on the collapse of the structure. But the legislator says these are the components we want to have in the structural portion of the reserve study. So we have to comply with it. It is what it is. Of course, waterproofing and exterior painting is part of the building envelope and protects the structure. And here I would like to note that we're not only talking about slapping some paint on the walls. That is why they call it waterproofing and not only painting. Waterproofing goes far beyond painting the facade. You need to think about balcony surfaces. They can suffer from water intrusion. And most often balconies are tiled, which is a detriment, in my opinion, because you cannot observe the surface of the balconies. We often encounter bulging tiles, tiles where we can see that the grout is failing. So we have to assume water intrusion. Most often you don't discover it on the early onset. Unfortunately, you discover the water intrusion under tiles at a point in time when we already are talking about concrete spalling, rebar exposure, and so forth. So you need to think different here when it comes to waterproofing and painting. All that has to be included. Garages, for example. Would you paint the floor? Maybe for the benefit of the eye, but you don't need to. Walls, should they be waterproofed? It depends really on the situation. I have one high-rise which has permanent water intrusion by wind-driven rain. That is something to think about. Ceiling of the garage, all that counts as structure and should be protected somehow. So it should be evaluated if these components need to be included in painting. In Florida, we have a lot of buildings with open hallways, which are being used on a permanent basis by pedestrians, by vendors, delivery people. So these walkways are suffering from daily use. Should they be included in an exterior paint and waterproofing job? Absolutely. Go a step further and think about windows and doors. They have to be caulked and sealed. So also this is included in waterproofing and exterior painting. When you have a high-rise with glass curtain wall elements, the waterproofing ceiling between the glass elements, does that count as waterproofing and exterior painting? Yes, it does. So I just want to bring that to your attention. Don't just think painting is slapping paint on the wall. There are many components which need to be included in waterproofing to protect your building adequately from the elements in our Florida subtropical environment. And that is a lot of people forget where we live. We live in the subtropics. And on top of that, we have a huge influx of saltine air, which is beating on the buildings. So waterproofing and painting, I can't say it often enough. It is very, very important. Then under G, we have windows and exterior doors. Through our short conversation, Courtney and I, we talked about windows and doors, and I already pointed out it really is important to know. That's the first thing I do when I start a reserve study. I examine the docs and the amendments to see if the association is responsible for windows and doors. If the association is responsible for windows and doors and never reserved for windows and doors, and maybe is already 30, 35, 40 years old, then we have a real problem. I experienced that in several high rises. And in one particular case of high-rise twin towers, the windows and exterior doors were association responsibility, and added a whopping 14 million to their reserve fund. So you can imagine what kind of influence that has on the reserves, on the community. It can be devastating. So in this case, they are working with their association attorney to amend their documents to shift the responsibility of windows and doors to the unit owners. So yes, windows and doors is an iffy point. It's a long-lived component. We usually give, depending on the quality, we usually give 45 to 50 years of life, sometimes even 55 years. It really depends. The question often arises, when does it make sense to include that? Because it is such a huge amount, it will, even if you put it 30 years into the future, a huge amount of windows and doors will impact the reserves immediately. And that is something you really have to work closely with your reserve provider to address this problem. And there is no recipe for an all solution. It really depends on the association and has to be addressed individually. And I would always recommend not only to work with the reserve provider. When the case gets a little bit more complicated, please involve your legal counsel. So you are always on the safe side as the board with your due diligence. So last but not least, we have what they call any other item that has a deferred maintenance expense or replacement cost that exceeds 10,000, and the failure to replace or maintain such item negatively affects the items listed in subparagraphs. Okay, so what can that be? One item missing in the MEP section, mechanical, electrical, plumbing, is HVAC. So you do not have to include AC units per se into the structural components. However, if the association has a lot of common areas, elevator shafts, lobbies, club room, entrance area, maybe elevator lobbies on 30 floors, fitness, sauna, all amenity area. That is a lot of tonnage. And let's just assume you are the entire AC system for the common areas, the elevator shafts, the hallways, stairwells, etc. Let's say that would fail or would not be replaced. Would the entrance of humidity in a mass concept in that building affect the building somehow? Yes. So in my case, I usually include AC systems, which I think are relevant to the safety of the building. But again, that depends on reserve providers. Some have different opinions. And in my opinion, it deserves a lot of discussions with the board, because a reserve provider should always discuss these questions and make the decisions sometimes together with the board. It's not only that we dictate every step of the reserve study, it's a cooperation with the board, in my opinion. So here we have a couple of the waivable components. Elevator, believe it or not, the state doesn't care about elevators. And I actually use the elevator very often as an example when people say, oh, can you please lower the roof? Or I think your waterproofing estimate is too high. And can't we take the money from somewhere else? And I usually try to explain to the client, look, don't make deals when it comes to safety of the building and specifically roof and waterproofing. You can waive your elevators, and no one cares if you don't operate elevators. So if the residents have to walk up 20 flights, it's beneficial for their health. But elevators don't have to be included in structural components. And what I told you in the milestone section already, railings are also waivable. I have one association which has probably 7 million of railings in their complex. They waived them all. They are waivable. Also, they are a very important life safety feature. Of course, all interior finishes are waivable. The pool and sport areas, site improvements, ground improvements, etc. Underground improvements, I want to talk real quick about seawall and retaining walls. We had a couple of cases where the building was very close to seawall or was supported by a retaining wall. When these walls become a structural element of the building, then I think these seawalls should be included in the structural portion of the reserve study. Keep that in mind if you have a building like this. So we include the component with the estimated remaining useful life, the estimated replacement cost, or the deferred maintenance expense of each item. The component and the studies may exclude items with indeterminate useful life or remaining life greater than 25 years. And there we go back to the windows and the doors. So when I come to an association which is, say, 10 years old, and the windows have 45 years, so they come online in 35 years. So I actually could say, no, I'm not including the windows because they are not in the 30-year scope of the reserve study. And I leave that completely blank. That is one choice. I've seen that being done. I would not recommend that. I would at least include a lump sum amount for deferred maintenance for windows and doors, because you might have to exchange a window here and then, which maybe has been installed wrong, maybe has water intrusion. There are different issues which can pop up. And then once you reach the 30-year window, then you would include the full amount. And that is another thing where you can speak with the association and give them maybe even financial calculation examples, how it would affect the reserves if the windows are being included from the very beginning. Because again, these associations would have a sufficient time to regulate the windows and doors replacement in a different way by, for example, changing their documents. Instead of including an exact amount and estimate, we can recommend a deferred maintenance expense in lieu of total replacement cost. That is what you usually see in long-lived components. Say the property is 10 years old and we want to include seawall. and the seawall would cost $1 million to replace. It doesn't make sense to put $1 million into the reserve as a total replacement component, because this is so far out in the future that no one really can say, will you have to replace just a portion of the seawall? Will you have to replace the entire seawall? But should that component be completely dropped and forgotten? No, I don't think so. So therefore, we include a deferred maintenance component and say, okay, every 20 years, we reserve $50,000 for eventual deferred maintenance of the seawall. And that would include, for example, an engineer inspection, seawall contractor coming in. Maybe you have cracks in the cap. Maybe there can be done some preventative repair work to extend the useful life of the seawall. So that is what we mean with deferred maintenance. Usually, I don't like the word maintenance in reserves at all, because I am really strictly dividing maintenance operating from reserves. So I use that operating account that for me includes all maintenance related issues. But again, in this case, the word maintenance together with deferred maintenance has become a reserve component for long-lived items which are way out in the future. SEERs can be provided by Florida engineers, licensed architects. Again, so far, I have not seen a single one from an architect. Reserve specialists and professional reserve analysts. The PRA designation, I don't know the name of the institute which grants that, but the RS designation is granted by the Community Association Institute, and it requires reserve specialists to really step up and comply with CAI national standards and guidelines for reserve study preparation. The structural integrity reserve study has to be done for all associations which existed before July 1st, 2022, and it has to be completed by December 31st, 2024. That might change when the governor signs. That is what I read so far, that they're going to extend it another year. Associations which are being turned over or created after July 2021, they need to have the structural integrity reserve study at the turnover and every 10 years thereafter. So we are often now being asked to provide a turnover report together with the structural integrity reserve study. So the association is set right from the beginning. And, you know, that is something I really appreciate that the legislator did that, because I see often associations which are maybe 5 or 6 years old, they don't even have enough money to pay for their painting, because you move into a brand new building and you forget everything about the future, because you don't think, well, what can happen? The building is perfect. Let's deal with this in 10 years. And then it's too late. And I had a couple of examples with 10, 11 floor high rises. These buildings were 6, 7 years old. They couldn't even paint. They couldn't even paint. And that is why I think having the SEERs at the initiation of the association upon turnover is one of the best components of the condo safety law, because it will prevent condominium associations from being bankrupt without even knowing it. Because again, that new building factor comes into play, and it's often very misleading. See, and here it ties also back into the milestone section where we already addressed this. If a milestone is due on or before December 31st, 2026, they may coordinate the SEERs together with a milestone inspection. So here you have the developer reporting requirement we just talked about. 718-301 requires the developer to provide the SEERs to the association as part of the turnover report. And that part was enacted in HB 2021. So is it still a smart decision by the association to get their own independent turnover study in Sears? Absolutely. Don't believe a developer ever, please. Been there, done that. We are seeing too many 558s, construction defect law lawsuits, and don't believe a developer ever. So you later get these slides anyway. I want to skip this. It's a lot of legal. I'd rather jump into the spreadsheet here, which was created to assist associations to actually understand how to separate their funds. Because before Sears, we had one big pot, right? And now you have to take out certain amounts for structural, certain amounts for waivable. And a spreadsheet like this can assist associations to better understand how beginning balances are being separated into Sears and waivable components. So in this case, we have a beginning balance of 1.279 million. Oh, sorry. I'm not allowed to click on the slide. And they're currently contributing 209,000. And we did a component, a study with all components in one study as a basis, so to speak, and developed the pooling amount. Come on, sorry. And developed the pooling amount and the component amount. And you see that in the second row, the green line. And now we're going to Sears and waivable. And you can see that under total assets, we have total assets in the entire study of 10 million plus. After we separated Sears and waivable, you are getting a better understanding now that 8 million is in the structural component and about 2 million is in the waivable component. And then we derive the ratio in the allocation of assets. And then you can really fairly balance the reserves you already have in the bank between structural integrity, structural components, and waivable components. So in this case, 79% of the beginning balance of 1.279 million has to be attributed to structural, and 21% can go into waivable. So that is one way of separating reserve funds correctly into structural and non-structural accounts. Can you keep everything in one study and call it structural integrity reserve study? Yes, of course. But you see that the difference is tremendous. If you would keep everything in one study, the association in this case would have to contribute $625,000 per year. Whereas when we separate structural and waivable into two separate pools, it goes down to 381,000. So you see that there is a huge financial benefit in using a correct pooling approach. Waiving or partial funding, structural versus non-structural. There are restrictions on the reserve funds of the structural portion. So you need to always think that this is a one-way door. Let's go back to that slide here. So when the result here is 1,015,000 to put into structural and 264 into waivable, could an association say, oh, we're gonna not mess around with this. We're gonna put 1.27 million, the beginning balance from their old reserve study. We're gonna put that into structural and we're gonna waive the entire waivable portion, or we start from scratch with the waivable portion. I've seen that happen because people want to have more money in structural. But if you do that, keep one thing in mind. That is a one-way door, okay? That only opens to the Sears side. You can, once you do that, you can never go back and say, oh, I changed my mind. I want to have the 264,000 back into waivable. That ship has sailed. Once the funds are attributed to structural, you cannot take it back. So you can stuff money into your structural at any point in time, but never the other way around. Keep that in mind before you move money from waivable into structural. This is also a lot of legalese we want to skip because I have included a slide here which gives us a little bit clearer understanding of comparison between straight line and pooling. Keep in mind we have 3 names for everything. Fully funded, straight line, component. It's always the same. Pooling, threshold, cash, it's always the same. So in component funding, every component is reserved in a separate account and they are untouchable. If you have a roof account, you are saving 20 years for that roof. If you need money in the meantime for painting or to replace a staircase, you cannot take it from the roof account. Everything is accounted separately, and these different earmarked accounts for the components, they are untouchable. There is no cross-utilizing of funds. However, in the pooling method, all funds are in one big pot, and the reserve calculations goal is for the pool to never drop below the threshold of 0. A lot of people are asking why 0? Why can't the threshold be 500,000? Well, if you want to do that, you have to take 500,000, put it in the bank and never touch it again. Then we would set a threshold to 500,000, but that doesn't make any sense. You would take money away from permanent action of the reserves. So a well-balanced pooled reserve will make sure that you always have money at the right point in time for planned reserve components. And even so, it's all in one big pot. Every component has an earmarked dedicated amount and will also show total useful life and remaining useful life. Now I'm showing you a couple of examples just to give you the difference in amount you pay and the percent funded. So this is an extreme case. It's true, it's all work files. It's true life what you see here. So this association is so badly funded, they only would pay 570,000 over a 30-year period with the current assessment evaluation, which would result in 2% funded. They should put in 2.9 million. I mean, that is 6 times more than they currently pay to reach a 30% funding. We would like to see actually 50% funding for a clean bill of health, but 31% is really bottom line. In comparison to that, they would have to pay over 3.3 million to reach, through component funding, 80% of funding. So there are different ways to show the client how the funding develops. This is another example. It's also based on CAI standards. This is the optimum solution with a suggested 7.5 million over 20 years, which would bring the association to 71% funded after 10 years and 100% funded after 20 years. Do associations have to be funded 100%? No, and I have not seen a single one. It is simply not necessary. Would we love to see that? Yeah, but no one can afford that. Here we have the medium assessment with adequate, stable, and not excessive cash flow. And here you see that it's only 4.7 million over 20 years, but it keeps the association at a good level, which goes along with the other example where we were around 33% in the pooling. So you see here the same. It fluctuates between 20 to 28. So that is something you can work with. My recommendation, if you pool, do update your reserve study on a regular basis. That is baseline, bare minimum. We don't want to see this. This is a funding we consider as a financial risk, because you're really getting to the point where you scratch bottom. And you can see that here, 8% funded, and at 30-year, we even go into -1%. We don't want to see that. CS components, waivable components can be pooled. I put a screenshot from the Department for Business and Professional Regulation screenshot there, because that is often the question. A lot of people still can't believe it. Yes, it is proven by the DBPR. The pooling method can be maintained for structural components, but you have to develop two separate sections of the reserve study, or you can even call it, you have to develop two separate reserve studies, the structural portion and the waivable portion. But of course, the entire financial situation of the association should be evaluated together, not as a standalone structural and a standalone waivable. Real quick, benefits of pooling reserves: you have more flexibility. The funds can be used on any item in the pool, but you need to keep in mind that CS pool and waivable pool must be maintained separately, and don't forget the one-way door. We have lower annual funding requirements, no need to fill up several buckets at all times, and allows an examination of cash flow to determine the lowest required funding. That's the baseline, but we also want to go and provide higher funds to be on the safe side. So when you see the outcome of your reserve evaluation and it says, oh, pooling is 100,000, component funding would be 300,000, everyone says, okay, let's put in 100,000. You always, when you see that the difference between pooling and component is significant, you need to evaluate that together with your provider and put more money into the reserve study to avoid that dropping to baseline scenario. There are also disadvantages for pooling. Smaller associations might not have sufficient checks and balances in place. That is why I always recommend, besides the board, you should have a budget or a finance committee to keep tabs on what the board is doing and vice versa. And again, the financial situation is less conservative when compared to component funding. And therefore, it is suggested that you always take that into consideration. The more far apart pooling and component is, the higher is your financial risk. And you always should put more in than the pooled funding suggests. Okay, that is my presentation. I'm at the end of this. You can use your phones and go to that QR code, and you can download the reserve study standards for further review and study. And that's the end of my presentation. Thank you so much. And if there are any questions, if we still have time for that, please go ahead.
Thank you, Patricia. And this may be an attorney question. Hans, you came off mute. Maybe you're going to answer. Actually, it's your section. But if you're able to answer, or this may need, further conversations with their attorney, what happens if an association does have to go into bankruptcy due to the cost of repairs and owners can't or won't pay the assessment?
That truly is an attorney or CPA question, right?
Yeah, there's a lot of moving parts to that question. I mean, an association can file for bankruptcy, but it's going to be up to the bankruptcy trustee and the bankruptcy court to really flesh out how this would apply to all the new requirements in the law regarding structural integrity reserve funding. So that's really, I'm not, I mean, maybe it's happened. I'm not aware of an association doing this yet, but so I just don't, I don't have a case example to give you, but I think it's probably a little too complex to address here.
Thank you, Hans. And thank you, Patricia. Thank you so much. That was a very thorough presentation. I don't see any other questions at the time, but if we do post some, if you do have any, you feel free to post them in the chat and we will try at the end to answer them if we have some time. Thank you again, Patricia. All right, Hans, we're going to turn it over to you for elections.
All right, thank you, Emily. I'll try to successfully save my, share my screen here. Do you want me to stop at a certain time to allow for Q&A?
I feel like we've done a pretty good job answering them along the way. So just feel, go through to feel like you covered everything appropriately. And then if we have some time at the end, we can answer questions. So you're okay.
All right, sounds good. Well, thank you all. Appreciate you all hanging in there for these board certification classes. I know it's long with it being 4 hours, but that's what the statute requires. And that's why we're doing it. This is the last section of this presentation, and then we'll try to do a little Q&A, as Emily said. So I appreciate you all hanging in there. So this last section is going to be on elections. Condo co-op elections are different from HOA elections. As you may or may not know, there's really no guidance in the law at all for HOAs, but for condos and co-ops, there is. The elections for the board of directors are actually, it must be conducted in compliance with the statutes, and the statutes do provide a procedure, which we'll get into, for elections. It's a standardized procedure that so that all condos and co-ops within the state of Florida, they follow the same exact election procedure. Now, regarding the length of director terms, that's going to be up to your bylaws. So the statutes tell you how to do the elections, but as far as what seats are up for each election, that's up to your bylaws. For example, some bylaws just say, let's say you have 5 directors. Some say each year all 5 seats are up for election, and that's fine. Some will account for staggered board terms. So maybe in 1 year, 3 of the 5 seats are up for election. The next year, 2 of the 5 seats are up for election. And then so you have a staggered term where there remains some continuity on the board. And so it's just up to your bylaws on whether, as far as how your board terms go. Now, co-owners of a unit, husband and wife, whoever it may be, that's living together and co-owners of a unit, they cannot serve on the board together. But the only exception, there's really 2 exceptions. One is if they own more than 1 unit, because if that's the case, then one could run for each unit, and that would be fine. But if they only own 1 unit, then that's not allowed unless there's not enough candidates to fill the vacancies in any given election. If so, then both co-owners could run and serve on the board at the same time. All right, so here's what I'll be discussing here on this election section. We'll go over the timeline of the election, which is, like I said, regulated by statute. We'll talk about who's eligible to be candidates, the balloting process, what's allowed and what would be a violation. We'll talk about how the elections are to be conducted at the meeting, and then any challenges of the elections, how vacancies in between elections are handled, and then we'll talk about the board member certification requirements, which is what you're doing today. All right, so here is the timeline for the election process as provided in the condo and the co-op statute. Now, so the top bullet point, let me address that first, and that is that if an owner is more than $1,000 in arrears and it's owed for more than 90 days, so they're past due more than 90 days, the law does allow the board to suspend voting rights for those people. But that has to be done at a board meeting. Okay, so you've got to have a board meeting where you have on the agenda item the vote to suspend all members that are more than 90 days past due with an amount more than $1,000. I wouldn't announce their names or their addresses. You don't want to violate any debt collection laws, but you know who they are. Your manager knows who they are. You just generally motion and vote to suspend all members who are past due that amount for that length of time. And that has to be done at least 90 days before the election to take effect. The people who are suspended must be sent a notice at least 90 days before the election date. All right. So as far as the election process, so it's a 2-notice system. The first notice goes out at least 60 days prior to the election. And now this first notice just generally informs all the members of the upcoming annual meeting and election. So you include the date, time, location of the annual meeting. What it does is it solicits interested members who want to run in the election for the board. And so anybody who's interested in doing that and being a candidate before at least 40 days prior to the annual meeting and election date, they must send a written notice of their intent to be a candidate. And an email is fine. They could just send an email to the manager saying, yes, I'd like to run for the board. And then at least 35 days prior to the annual meeting and election date, those candidates who have submitted their written candidacies, they can also submit a 1-page candidate information sheet. It's more or less kind of like a resume / let me tell the members who I am and why I want to run for the board. Because if you're a large association, you're obviously not going to know everybody. Everyone is not going to know who all the other owners are. And so it's a way for those running for the board to share a little bit of information about themselves, who they are, what their background is, why they want to run for the board, things like that. Okay. It's called a candidate information sheet. And it's a 1-page, 8.5 by 11, your typical standard page. And it's just one-sided, and they provide whatever information they want, and they submit it to the association to be included with the second notice. Now, the law says that an association may not edit, alter, or modify the candidate information sheet. It's the candidates can include whatever information they want. And if something is misleading or incorrect, that's on that person, that's on that candidate. And so the association by law cannot make any changes to what a candidate submits. Now, within 34 to 14 days prior to the annual meeting and election, that's when the second notice goes out. All right. And so the second notice is basically your meeting notice. All membership meetings must have a notice, right? So that's what the second notice is. It's your standard meeting notice. And so it not only includes the notice and agenda of what's happening at the meeting, but it includes the ballot, right? Because now that you know who the candidates are, because they had to submit their names ahead of time, you know who they are and you can list them on the ballot. You list any candidate, you include any candidate information sheets that have been provided. And then you list the 2 envelopes, the smaller envelope and the larger outer envelope. And I'll discuss what that is about on a later slide. And then you would include also anything else. So maybe you're having other votes too. Maybe a vote on the amendment to the documents. Maybe a vote on using reserve or funds for other whatever. Maybe to the common areas. Whatever it is that is up for a vote, you would also include proxies for that as well. Now, that has to go out. That second notice has to go out at least 14 days prior to the election day, because it's got to be at least a 14-day notice. And that's the timeline for condo and co-op elections. All right. Now, let's talk about who's eligible to be a candidate on the board. So here's what the law says. Any owner is allowed to run for the board. Okay. And you just got to submit your candidacy 40 days before the election, as I just discussed. Now, there's only a few limited exceptions to that are articulated in the statute. And that's what this slide says at the bottom. So if the person is past due in assessments when the time comes for submitting written intent to be a candidate, then they're not going to be able to run for the board. You can't be delinquent and run for the board. That's a way to kind of protect abuse, right? You can't not pay your assessments and then try to get on the board. So you've got to be current in whatever you owe to the association. You're not going to be eligible if you've been suspended or removed by the DBPR. Remember, the DBPR is the government agency that has oversight over a vast area of condo and co-op issues. if for whatever reason the DBPR did an investigation and found that a person on the board did something wrong that required removal or suspension, then that person is not going to be eligible to run for the board. Also, any convicted felon that has not had their civil rights restored for more than 5 years, they're not eligible to run for the board. And I already mentioned the fact that co-owners of one unit are not eligible to run for the board either. Now, I often get the question of, there might be an owner that is a landlord, right? And they live out of state, but for whatever reason, that person has submitted their candidacy to be on the board. That's allowed. The statute says all owners can be on the board, can run for the board unless you fall into one of these limited exceptions. And that's not one of them. Being an out of state or a landlord that does not live on the property, that does not exclude you for running for the board. So those individuals would still be allowed to run for the board and to be on the board if they are elected. Now on this slide, I think it's a good spot to mention. I also want to mention the term limit requirements. You may or may not know this, but in 2018, there was a change to the law that put in term limits for board members, which is 8 years. So it's an 8-year term limit. That was put into effect in 2018, which means the 8 years isn't until 2026. So you still got one more year before those term limits take into effect. But after July 1st, 2026, the 8-year term limits would work to prevent someone from running for the board, I guess, for the 9th year. There's two exceptions to that. One is if that person actually gets 2/3 of the votes. So that, the statute says if someone wins an election by getting a vote of at least 2/3 of the members, then they can remain on the board, or unless there's not enough candidates to fill the vacancies. So, these are volunteer positions. Some associations have no problem getting candidates. Others, it's like pulling teeth. And you may have a 5-person board, but you never really get 5 candidates. You always have less than that. And so if you have less candidates than available seats and one of them is already beyond the term limits, they would still be allowed to run because there's nobody else running.
Hans,
yeah.
Really quickly, can you state when that went into effect again? Someone's asking in the chat.
Yeah, so the law, most of the time, laws go into effect July 1st of the year in which they're passed, and this was passed in July in 2018. And so this term limit law became effective July 1st, 2018, which means the 8 years would be July 1st, 2026. So anybody that is on the board after July 1st, 2026, and they've been on the board for more than 8 years, then the term limit would come into effect. And so for that next election, they wouldn't be able to get on the board again unless they got a 2/3 vote of the members of the entire membership, or unless there were not enough candidates to fill the seats.
And is that consecutive years, or can they be on for like 4 and then off for a year and then go back for 6 more?
It's actually consecutive years. That's a good question. Thank you. If I didn't mention that, it's 8 consecutive years. So if someone was on for, 8 years a while ago, but then there's been a break, it's 8 consecutive years. So there can be a break and then they can run. So they can take a year off or 2 years off and try to run again and get back on the board.
Great, thank you.
Okay, so let's talk about the ballots. Now, the ballots must be uniform in color and appearance. They're supposed to look the same. However your management company is printing up the ballots, that's how they need to be for every ballot. Whether it's a white sheet of paper, yellow sheet of paper, if it's a certain size, it needs to be the same. And then the candidates must be listed on there in alphabetical order by surname. Okay, it's not supposed to give any advantage to incumbents. Okay, so you cannot indicate who the incumbents are, and you can't list them by listing the incumbents first and then any new candidates after. No, they've got to be listed in alphabetical order. And on the ballots, they're supposed to be secret ballots, which means there's not supposed to be any identification of who is submitting the ballot. So no place to put your unit. You're not supposed to put your unit on the ballot, your unit number. You're not supposed to sign it. You're not supposed to put your name. And I'm talking about members who are completing the ballots. It's a secret ballot, so you're not supposed to put any identification on there. And there should be no spaces to put identifying information on the ballots. it's a secret ballot, which is a 2-envelope system. I mentioned on the slide with the election procedures that the second notice includes 2 envelopes, and that's because that's how you do a secret, where you have a smaller inner envelope that is blank and has no identifying information on it, and then you have a larger outer envelope where the owner puts their name, unit number, and signature. And so the larger outer envelope has the identifying information so that you know who's submitting a ballot. And once that's verified, you open it up, you take the inner envelope out that has no identification on it, and then the ballot inside should have no identification on it. And that's how you keep it a secret ballot. And I'll talk more about that on a subsequent slide. All right. So conducting the election. So as I mentioned, it's a secret ballot. Voting by proxy in an election is not allowed. It's got to be by a ballot. It's got to be the standard ballot that lists out all the candidates, and you check which ones you're voting for. And other types of voting could be done by a proxy, whether it's amendments to the governing documents or any other issue that may come up. But it's just when it comes to elections, it's got to be done by the secret ballot system. Now, voting certificate requirements, you got to check your association's governing documents for that. What is a voting certificate? A voting certificate is when you have a unit that is owned by more than one person, right? So it could be husband and wife, could just be, whoever. Or it's owned by maybe a corporate entity. Maybe it's owned by an LLC, or could even be owned by a trust. What a voting certificate is it designates who is eligible to vote for that unit, right? So if you got multiple unit owners, who's the one that's eligible? If it's owned by an LLC, who's the person with the LLC that's eligible to cast the vote? That's what a voting certificate is. Now, most governing documents, not all, because it's up to your governing documents, it's not up to the statute. Most bylaws will say that voting certificates are required, right? And that's how you as an association know who is casting the vote for that unit. Now, here's what the DBPR says through years and decades of election challenges and arbitration orders on election disputes. What they say is you can only enforce the voting certificate requirement for an election if you have a history of doing that. So here's what I mean. Someone submits a vote and it's disqualified, and you say, well, we don't have you listed as the designated voter for that unit. Okay. Well, does the association have a history of consistently maintaining up-to-date voting certificates where they're actually able to make that kind of determination? If so, okay, well then the DBPR says yes. Then for any given election, you can use that as a method for disqualifying votes. But if not, if you don't have a history of collecting voting certificates and requiring them to be updated as there's new owner, and just when a certain election takes place and you may not like the outcome, I'm using the word you in a general sense, when someone doesn't like the outcome, they can't use that as a basis for denying the vote if you don't have a history of using those voting certificates. Now, what that means is obviously there can only be one vote per unit, right? You can't have, just because 2 people own a unit, you can't have 2 votes. And that's what the voting certificate is supposed to be for. But if you don't have a history of using them, then any one of those owners could make that vote as long as it's just one vote. All right, whether it's the husband that makes the vote, whether it's the wife that makes the vote, or any other co-owner, that's fine. But if there's 2 or more votes from that same unit, then all the votes are disqualified because you can only have 1 vote per unit. So if you're going through the outer envelopes and you notice that there's been 3 envelopes submitted on behalf of 1 unit, well, they're disqualified because you don't know which one is the correct one, and they've submitted multiple ones, which is not allowed. So hopefully that makes sense. Now, you must have ballots and inner and outer envelopes at the meeting, right? People can mail these in, okay? I mean, you're sending out the second notice that has the ballots and the envelopes, and so people can fill them out and mail them back to the association, but they don't necessarily have to. They could show up to the meeting and vote in person, and it's still a secret balloting system. So for those who show up in person at the meeting, you've got to have blank ballots and inner and outer envelopes so that people can do that there. They fill out the ballot, they put it in the inner envelope, then they put it in the outer envelope, they put their name, address, and signature, and then they hand it in to the manager or board member at the meeting. Now, as I mentioned, elections are not required if you have less than or equal to candidates as to the number of seats available, right? I mean, if you have 5 open board seats, but only 3 people submit candidacies, there's nothing to have an election about, right? Those 3 people just at the meeting, they take their seats on the board because there's less candidates than open seats. And now let me just talk about the tallying of ballots. Okay. I talked about the 2 envelope system, but I just want to make sure it's clear for everybody, especially those new board members who are on this webinar, so that everybody understands. So here's how it works. What you're supposed to be getting is the outer envelope, right? That's what it is you're supposed to be seeing. And on the outer envelope of a submitted ballot, it has the owner's name, unit number, and signature. Now you're supposed to have a roster, right? A roster of all the unit owners, right? That's one of the official records. If you remember back when I was on the official records part of this presentation. So you match up the outer ballot with the roster. Okay, it looks like this was from John Doe and Unit 100. Let me see here, Unit 100. Oh yeah, that's owned by John Doe. You match it up on the roster, and then that's how you verify that it's a valid vote. And so then what you do is you open up the outer envelope because you verified it, and you take out the inner envelope that has no identifying marks on it. And then you put that into a bucket, a cardboard box, a bucket, or some kind of pile. You set it aside. And then you do that for all the outer envelopes that you've received. You verify that it's submitted from a valid member who doesn't have their voting rights suspended, and that there's not more than 1 vote for a unit. And so once you do that and you verify all the outer envelopes, then you have your pile of inner envelopes, right? And then that's when at the annual meeting, you're supposed to have it's a group of like 2 or 3 owners who are in attendance, who are not candidates or not related to candidates, and they're the ones who verify the ballots and tally up the ballots. It's like a little election committee there who that's their job, is to open up the inner envelopes, take out the ballots, and tally them up, and then that's what you do. Now, if on the ballots you open it up and it has the person's name on it, like the person who's submitting the vote, it has their unit number or their name, you've got to discard that because that's no longer a secret ballot. Only secret ballots are allowed. And so you're going to end up with 2 piles, right? You're going to end up with a pile of valid ballots, and you're going to have a pile of invalid ones for whichever ones were submitted not according to the statutes. Now, if you also remember from my presentation on official records, all voting materials are required to be kept for 1 year. So you got to keep all this, right? Even the ones that were invalid, you don't count them towards the election, but you still got to hold on to them for 1 year. And that's because what if there is an election challenge? Well, if there's an election challenge, you need to be able to demonstrate all the ballots you got, which ones you accepted, which ones you rejected, and the reason why you rejected them. And so you got to keep all the outer envelopes. You got to keep all the ballots, the valid ones and the invalid ones, and they got to remain in your official records for 1 year. And then you tally up the ballots, right? And then whoever has the most votes for the open number of board seats, those are your new board members. And that happens at the annual meeting. All right. Now let's talk about quorum requirements. So this is where it can get a little interesting because there's different requirements for what makes a valid election versus what makes a valid meeting. And here's what I mean. The statute says to have a valid election, you just need 20% of the eligible voters to cast ballots, right? So if you have a 100-person condo association, you just need 20 of those 100 units to submit ballots. And if you do, then you can have a valid election. If you only have 19, well, that's not 20%. And so you don't have a valid election. And then those existing board members just hold over for another term. Now, quorum is a little different, right? Quorum is how many members do you need to have either in person or by proxy to have a valid meeting, right? Now, the statute says it's a majority of the members is quorum unless your documents provide for count. And so, your documents may say 40% is a quorum or 35% is a quorum, whatever. If it doesn't say anything, then you defer to the statute, which says it's a majority, which is 50% plus one. All right. So what this means is you could have a situation. There could be three things that happen at your annual meeting because of this. You could have not enough ballots, 20%, and not enough for a quorum. And so you don't have anything. You don't have an election and you don't have a meeting. Or, which I actually see happen a lot, is you actually do get enough to have an election. You got more than 20% of the people submitting ballots, but you actually don't meet the quorum requirement. So you actually do have an election, you just never have a meeting. And I know that sounds a little weird, but that's how it could work, because you only need 20% of the members to cast a ballot to have an election, but you need a quorum to show up to actually have a meeting. And so if you fall in that situation, you have the election because you have more than 20%. And then when the election results are announced, you say, well, we had enough to have an election. We don't have enough to have a quorum. So we actually don't have a meeting. And so we're concluded today. Or you could have the third scenario where you end up with an election and a meeting, right? You had more than enough ballots to exceed the 20%, and you met whatever, either by proxies or by people showing up in person. You had enough to have a quorum. And so you have both. So then you have your election and then you have your membership meeting. So that's how it's going to play every year, depending on what you get as far as ballots and meeting the quorum requirements. All right. Now, so you can get an election monitor. You'd have to pay for it. An election monitor is provided by the DBPR. It's someone from the Ombudsman's office at the DBPR. I've been to some meetings and elections where there was an election monitor, and they're just there to make sure everything's done correctly. Like I said, it's an expense, so you do have to pay for it. Now, the board can always request an election monitor, and you just submit the request to the DBPR. If the board doesn't do it, but the members want to have an election monitor there, then there is a mechanism for the members to request that. You have to have at least 15% of the voting interest or 6 unit owners, whichever is greater, to submit a request to the DBPR to have an election monitor there to oversee the elections. Now, there is a mechanism in the law to have online voting. So you're not required to do it, but it is an option. If that is something your association wants to do, it starts off with the board passing a board resolution at a board meeting to implement online voting. And then once you implement online voting through that board resolution, and there's many providers out there, you can just Google, Florida Condo online voting, and you'll find vendors out there who will do that for you, and they meet the statutory requirements. But once that is allowed by the board through a board resolution, it's still up to each individual owner whether they want to consent to online voting or not. Some don't feel comfortable with the computer, and so they don't want to do it. They just want to submit paper ballots, and that's fine. Others want to consent to online voting, and they have the right to do that. You can only require online voting for those who have consented to it. So if someone doesn't consent in writing to online voting, you can't force them to do online voting. They have to still do the paper envelope system, which means if you don't get 100% of your members agreeing to doing online voting, you're going to have this hybrid system where those who do consent can vote online, and those who don't still do the paper ballot through the envelopes, which is fine. It just depends on how you look at it, because what the law says is those who vote via online count towards a quorum. So some associations do it just because it helps them to get a quorum. Maybe they went years and years and years without being able to get a quorum. And once they implemented online voting and people just submitted their votes online, the law says you can count those votes to a quorum. And so it allows you to have a quorum to actually get business done. But just know that if you're not having 100%, then you still got to send out the paper ballots for those not doing it. So it just depends on how you look at it. Now, challenges to the election. What the statute says is that elections can be challenged. They just have to be done within 60 days of the election. So you can look at it as elections have a 60-day statute of limitations, right? You got 60 days to challenge it, and you can either challenge it by filing an election arbitration petition with the DBPR or filing an action in state court. I would say, the DBPR has been doing this for decades, so I would say they're probably a little better at getting that done, getting through these election challenges. So it might be better to go through the DDPR, but you'll want to talk to your attorney about that if there is an election challenge. But just know that it has to be done within 60 days. Okay. If it's day 61, it's going to get rejected. Sorry, you didn't make the 60 days. That election's valid because you missed the deadline to challenge it. So even if it was done wrong, you know it was done wrong. If you missed that 60 days to challenge it, you just got to live with it, and you just got to wait till the next election. Now, what do you do if there's vacancies on the board in between elections? What the statute says is that, so let's say you have 5 board seats, but only 4 are vacant. I'm sorry, 4 are filled. So you have 1 vacancy. The statute says that in between elections, those on the board, those remaining board members can vote by majority to appoint someone to that vacant seat. And that person is on that seat until the next election. So let's, because these are volunteer positions, right? You're a board member. No one's forcing you to be on the board. So anybody could resign at any time, or you could move away, or you could have some kind of health issue. And so you're not on the board, you resign. And that's how it works. Let's say you're halfway through the year, someone resigns, but you want to fill that seat. So then the remaining board members at a board meeting vote by majority vote to appoint a willing volunteer to that vacant seat. And then they're on that seat for the remaining 6 months of that term. And then that seat's up for election at the next annual meeting. All right. Board member certification, as you know, that's what you're here for today. What the law says is that either before becoming a board member or within 90 days of becoming a board member, you got to be board certified, which means you've got to take a class like this and get a certificate and certify in writing that you've read the governing documents and that you will uphold them. Now, this law was passed last July, where it was a requirement to have a 4-hour board certification course like the one you're at today. So what that means is if you were elected or appointed to the board before July 1st of last year, you've got to do the board certification by June 30th of 2025, which is why we're having this right now on June 20th, 2025, to get you in there just in time. What the law says is if you were appointed after July 1st of 2024, then you've got to get board certified within 90 days of being on the board. And so going forward, all new board members, you got 90 days to get board certified. What the law says is if you don't get board certified, you're suspended and not on the board until you get board certified. And then once you get board certified and get your certificate, then you're back on the board. Now, continuing education, that what we just talked about was your 4-hour board certification. There's also a continuing education component of this. And what that says is every year, you got to take at least 1 hour of continuing education regarding any recent changes to the laws. That could be changes to the statutes, I guess, case law changes. And so most organizations in this community association area, law firms, management companies, CAI, they will do these continuing education classes every year for any new legislative updates or changes to the law so that you can get your 1 hour of continuing education each year. And so that's how you get board certified and you stay educated through the continuing education while you're on your term as a board member. All right, best practices, just know your governing documents. You just want to know, hey, are voting certificates required? Are they not required? Is there anything unique to our association? The actual timeline, like we mentioned, for the election is governed by statute, but there might be some things that are not addressed in the statute that may be specific to your association. So you're going to want to know what your bylaws say about it. And, you might want to consider hiring an independent election monitor. If you're in a association where it seems like every year it's a little contentious and there's a lot of bickering between the members as to what happens at the election, you might just want to try to solve that, nip it in the bud by getting an election monitor out there. It is an expense, but it's not, it's reasonable. So you might want to think about doing that. That concludes this election section, and I believe that concludes this board certification. So I will turn it back over to Emily, and maybe we have time for a little Q&A.
Thank you, Hans. Great presentation. Again, lots of great information. We do have just a couple minutes before we kind of close it out and let you know how you can continue to get, this great education and information. This is regarding something you said earlier, and I should have asked it then, but someone said 2/3 vote of entire membership or 2/3 vote of votes cast. I'm sure you know what they're referring to. I don't.
Yeah,
Okay.
probably. I think what they were talking about was for the term limits.
Okay.
That's a good question. I'm gonna have to look into that. I think it's 2/3 of the entire membership.
Okay, great. Thank you. And then someone asked, if not enough candidates run, can a husband and a wife run?
Yeah, that was one of the exceptions. So what
Oh,
the
it was.
statute says is co-owners cannot be on the board at the same time unless there's less candidates than seats.
Okay. And then I think you cleared this up, but they asked where the law that became effective with the term limits, that was not retroactive. I mean, let's see, it went into effect when it became effective, or it was
Yeah.
retroactive before 2018.
Right.
Right.
It became effective the year it was passed, which was 2018. It did not apply prior. So that's why the first term limits are not until 2026. So it didn't. So you could have had someone on the board 10 years at 2018, but the law was passed then. And so the first year counting towards term limits is 2018. It doesn't matter their term prior to that.
Gotcha. Okay, wonderful. I think there are a couple questions, and I'm so sorry we haven't had a chance to answer them. If you want to reach out to me, I will definitely get those answered for you. But I really appreciate the presenters, and I hope you all got a lot out of this. And I'm going to turn it over to Alicia, who is the chapter executive director for our Gold Coast chapter, and she's going to close us out.
Hello, Emily, thank you so much. Yes, good afternoon, everyone. As Scott mentioned at the top of the webinar, my name is Alicia Fella, the Executive Director for the Gold Coast chapter. We just want to thank you all for taking the time to participate in today's Condo Co-op Board Certification course. We also appreciate the fantastic presenters today. We had Dave Hutchsprung, Hans Wall, Chuck Shoemaker, and Patricia Stabler. For all of the valuable information that they provided. Please remember that you will be emailed your certificate of completion in 1 to 2 weeks. And for those of you that are unfamiliar with CAI, it is the oldest, largest, and most established organization in the community association field. We are the first and only national organization dedicated to meeting all of the needs of community association stakeholders. So the resources that we have are designated to help you gain knowledge and perspective that you'll need to serve your community effectively and protect your largest asset, your home. One huge benefit of the homeowner leader membership is access to the online exchange forum. So this online portal allows board members to engage in discussion by posting and responding to messages on the topics like community governance, operation, and management. It's a collaborative space, much like the chat feature that you experienced today. So there's always lots of fresh conversation and people really invested in supporting one another. If you'd like to discover more about this, the benefits of the CAI membership, please go to caionline.org/become a member, or you can also use the QR code that's currently displayed on the screen in front of you. Again, thank you so much, everyone, for your time, and we hope you have a wonderful weekend.
Bye, everyone.
Bye.
Thank you.
Thank you.
Thank you.
Thank you.